B point has just been hit. That's the first one of the day, the first one I put in there. Basically, I won't even count it either. It doesn't even count. Don't even care about it. I took profit at it, but that's okay. At the end of the day, we'll start with a new one. And you know, basically, I'll go over that. If for anybody that's positioned the way that I said to be positioned for the past couple weeks, if you're still long, then you're doing it right, and you're looking for a hedge. If not, that's absolutely fine. I think that today we'll find many opportunities, just like the one that we had right here, to build up a cushion if you don't have one, to potentially enter a position that could last for longer than a day. And I mean, if one is in nothing, then that will be your objective, is to first build up a cushion, so that you can have some money to work with, and essentially you're not taking too much of a risk on your average position size because you've got a little bit of a cushion to work with. And that can be taken by, or that can be made, but just little trades like this one, like the first trade of the day, where basically well, I don't even count this one, like I said, but this is 20 points back to the B point. On the smallest increment that you're allowed to trade on this, it's effectively $40 per contract. So it's like, the 3 trade trifecta, something to consider early on, where if you're trying to build that cushion, you want to be able to trim some off before it gets to the target, some at the target, and some for beyond the target. And it's really straightforward when it comes down to managing the position once you have it, because you can effectively pay yourself by taking some off on the short term. You can pay yourself more by getting to the target, and then you can pay yourself even more by getting through the target and potentially having even more of a long-term run, depending on the situation. Not always does it get past the target. That's why it's important to make sure that you have some off there. And if not, then why not, right? Like, because it seems to be that this is the an effective way to manage it. And of course, we have the open in 4 minutes.
Where's that VWAP that you have there, John, from?
That one's actually from last week there, where basically we have a little bit of a consolidation in here. And, towards the end of the week last week, I'm making a video on all of it, but it's taken me a long time because there's so much content. I'm going to make short videos and long videos about it as well. So people will be able to watch like the entire move and everything that I had to say about it, because like it's unbelievable. It is literally unbelievable how clear this entire thing was. I even named it the agenda. And I'll show you that I came up with the agenda not when it was moving, but before. Came up with it when we were in the spikes and springs on the first video. I've already clipped out every single time that I've said agenda within the first hour of this day, and it was over 3 times. Which is funny because the next day I was really like all about it, because it continued the agenda. It was true that it was an agenda of a huge entity and not the agenda of the American public, which is really interesting to me. Because it all started on a bearish news article where everybody saw a big dump, and their screens were just riddled with a big, fast, sharp dump that people would say, "Oh, why did this dump happen?" They would open the news and they would see that the news event was there, and they would think, "Oh, this is why it happened." Little did they know, by the end of the day, every bit of that dump was bought back out. They wouldn't check. Most people, I think 70% of the people, just went to bed thinking it was down. That's the funny part about it. And I see that, and I mean, like, oh, got them again. I mean, like, that's why I say making it 9:30 to 4, make it look easy, and you'll have an incredible advantage, because a lot of people seem to lack the discipline. And I mean, you can see why the market takes advantage of those that lack the discipline, because it makes moves into the close, because it makes things, it otherwise things that are very important seem to happen at times where people are not available, or where it's been too tough, or it's taken too long, or so on and so forth. And I'll go over this every day because It's literally the bane of my existence. Like I believe, that there's entities out there with far more money than the average person, and then there's a bunch of the average person out there. And we have to understand both of them. But a lot of people are too busy just looking at average people that they can never really see the difference or these big moves. They just see what average people are interested in. And that doesn't make you money. What makes you money is understanding the agenda of these major entities that can continuously push through all of your favorite bearish patterns just to get to the end goal and continuously go high. Like this is the run where I was like, it goes up then sideways and then it goes up, with a little bit of a pullback, up then sideways and then up then up. I use that. That's where I am in the video right now. I'm explaining that's the case in the video, and it'll take me a little while because I do focus on quality, and throughout the entire video so far, I've found an opportunity to make maybe about 3 or 4 1-minute videos that can basically I'm gonna post them out there and I'm gonna basically try and that'll be what will compel people to watch the longer one because you will see that how clear it is on these smaller videos and how many different small indications I've given throughout the entire journey here, and I'm like, they could be all small little videos of their own, and all the small little patterns that I've said and everything like that. It's absolutely amazing. But we'll see. I'll put it in a video. I'll literally start knocking doors if I have to and be like, watch my video. Like what the hell? I'll go down the beach when it gets to summertime. Because it's like I will take somebody off of the street if I have to and like be like, you know what? I will let you live in my house and you can come and frickin' trade with me and I will show you how to make money and change their life. Something like that. Probably not the best idea, but I'm willing to go out there and prove to all these people that aren't here right now that they should be. The blue line is something that's going to get tested. I don't count that either. Not something like nobody can do anything with that. But as long as you know, that's the one thing. We know that now there's one level, like that blue line, that the market has acknowledged that it does like to retest. You know, I'm adamant on these levels getting tested, sure, but sure they're insignificant. So we'll look at the bigger ones when they do arise. But I don't get to decide that it was positioned like that with the need to come down to the blue line, and it just came down to the blue line, and I'm like, well, because it was supposed to. Mm-hmm. The 61 is also another major level in this area that has a node. Doesn't mean we have to stay at it for too long, though. Ironically, getting on top of it could be on the agenda. Testing it from above and making sure that we acknowledge it, but not really giving people an opportunity from it. Because what are they going to do? Buy on it? I mean, like, that's the opportunity, but I wouldn't do it, but yeah, it's crazy. It's crazy because what people wouldn't expect it to do is what it's doing. This is a level that's supposed to hold it down. And I could see that this morning is spent getting people out of the way. People think that that level's going to hold. Somebody lost money on it. Guaranteed. Because they think it's the 61 and the 61 should hold indefinitely, and it's not true. But I'm looking forward to today and what the market will bring because I am confident I will find much clarity and I will be able to take action on it. And we did get through the 61. We're almost at the POC. But I even added into my stream today, like, oh whoops, that So we're testing that 61 from above. Sorry about that. I had to fix something there. I do think that in the future, this blue line will be something that we'll see again. And, it's funny to me too, because back over here, we have another one that we haven't seen before, ever. That one. It's a really, really intriguing level. I'm going to make it blue and white so it stands out amongst other blue lines. The name of the game today for those that are still holding from last week is to find a hedge. Anybody that caught this move from, like, if you were here in the morning, like I specifically said, today, this is how I started the day with a post that says, the name of the game this morning for anyone holding is to find a short hedge. If you're not in, then we will find the extreme. It could happen before you show up, meaning that if people were too late, or it could happen at 2 p.m., which is too much time to wait. All I can say is that we can be ready. And nobody decides when it happens. We decide that if we're ready for the opportunity when it arises. There's only so much time in the trading day, and it's not much for what it is worth to catch the highs and lows. We know working hard to catch a move like this puts you in a position where you can find the flexibility to come in and see how much the trade progresses. Like anybody that's holding from last week, like how much are you up today? You don't have to look, but it's like you're up, and that's the main thing. You did good, and at the end of the day, it's like you're not having to find it every day. You didn't have to catch this long. I took it anyways on a side account because I'm like, well, if it's going to be this clear in the morning, for sure. But not have to find it every day and simply focus on trading in the other direction. So if you're in long, you're looking at trying to take it down, trying to find out spots that you can trade back to. Not to say that there's been any great ones yet, though. Above all, today we focus on the opportunities the market provides against the trend, while we wait for the long assets to continue, benefiting those that decided to hold. It's incredible. But it's like if the people of the Nasdaq index weren't on this move, then what move or what strategy could they have been on that would have been better? And if you can find one, let me know. But if you can find one, let me know. That'd be very interesting. Because there's only been one move the market has made that has amounted to this much profit, and it has been the one that I said to go on. So it's very, very interesting. And it's been the toughest one. It's inhumane to be on it because it will offer you more profit than you're used to. It'll make you want to fold because it's getting too hard. It's easy to take the money. That's why people didn't make it 2, 3 days into this move, because it was the agenda of the people that are really good at making all of the money. And people that aren't good at making money might get a little bit shocked when they get a little taste of it. And it's true. And it's not just a whim on like, oh yeah, maybe this will never happen again. It's like, no, 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 no. The playbook was clear before the move happened. There was no waiting for confirmation. The video that I started on the weekend begins here. And at that moment, I was making the target here. That was where the report came from. So, and I haven't even got to here yet, because you know that we were bullish there. There was short-term bullish targets that you could have taken that led into continuing targets that have been hit. Like when I get to the point where I was putting that green B point in, it's almost like what happened, right? What happened to that trade? Or what happened to this one? And I'm like, and then it's like the next day I'll get into that too. What happened here? Because you best believe we were catching it. So kind of interesting. And then there comes the day after as well, where it's ironic that the day after came to chart is that NDQM. What was this day? See how much it's progressed beyond that first N, you know, and literally um, it's managed to make this pattern and again, and then we've come to this point where we've blown through every single one of these levels. Isn't that interesting? You know what we do on the short term when we get to those levels is we come back to them if we treat them like this. And you want to know what move would perfectly get back to them? This one. That one could be an attractive one. I can see right now we are at a 261. So this level right here has been notorious for taking it down. What's funny about it is it's notorious for bringing it back to this level. So it's like, what is the value of capturing a short-term trade targeting 10 points, targeting 15 points, and you let some of it run? Could it be worth 555 points? That's a piece of information that will not leave my mind today. The entire upwards move has been taken back. If you do have a hedge, this is a good spot to consider taking some off. There will be more opportunities if you don't. And here I can see that we've made a spike on the top and a spike on the bottom, you know, around this middle area. It is true that there is a downtrend. So I'm trying to find the chart we were just on there. So we can see we did return back to this blue line here. There is another blue line that I think is incredibly important, and it is the blue and white line. Under no circumstances do I think it's safe for any long trades from previous weeks to be dragged above that level. Having taken some off and found a hedge is the best position that you could be in. If you're not in that position, that's okay. We will be presented with another one from what it looks like. This node right here could be interested in getting touched. It's kind of disappeared on me there. Let's take a look at it. It's from this volume in here. So if you are hedged, it means that there's no dragon stops underneath that level. You know, underneath any of this point here, I know they're all going to become B points, right? Every single one of these levels that wants to get touched from the underside, it's allowed to get touched from the underside. It's an incredibly difficult place to drag short stops. But at the end of the day, this is a VWAP, and it has been known to reduce volatility. Of course, it's the open, so could get rid of some of the open volatility. If it tries to make a pop all the way back to that old node, that's okay. It means just don't drag stops underneath it if you have a position. This entire consolidation has a giant node if we take a look at it, where it basically ends here. This point becomes a B point, and so does the one that we just made down below here. So they're targets for future harmonic patterns like these ones down here that haven't been hit on the way up. So like the way that we went up was incredibly sloppy, and it left many B points along the way untested. The VWAP could get tested from underside as well. That's another thing that you want to watch out for. Don't allow it to take any positions from you. Basically a move that would be otherwise typical. Of course, a lot of the movement that we had was overnight, and it's going to look like a huge gap on QQQ. A lot of people will be aware of this gap. It might not get filled all the way initially. I think a lot of people look for gap fills. It's a really average trader thing to do. And in 2023, we will see that, or we saw that things that were really commonly, used within the past 3 decades could be thrown out, like they were not even part of a pattern, shouldn't even be on Google. So it's like, it's interesting to see that we're here stuck in between this gap. It insinuates that things are not going the way that they should, and that we should be a little bit more worried about getting back to this point. And that's also going to look like getting back to the VWAP there. So a lot of traders will be talking about a gap like that, and they're just basically unaware that there's actually movement that is there. It's just not visible on the securities that they trade. So like a lot of QQQ traders and stuff like that will be seeing that gap, especially on a lot of stocks too. A lot of people that trade stocks like Facebook or Meta, I guess it's called now, will have that, as well as Apple. Tesla's moving differently. So we can see we've come back to test this node here, or not node, but this channel. Basically, it's at a spot where there's B points on there. All of these B points have been cleared. Basically, the need to come back and test this node was paramount above the gap. So everybody that was considering the gap was otherwise wrong right now, and everybody that's trying to go for the underside of this gap is what's like, that's the move the market chooses to make right now. And the gap, it will be seen, it will be crossed in the future, but not initially. It has to put the, I want to say, average traders underneath a lot of pressure first, because there's been strategies, from the early 2000s even about those gaps, and I just think that they work a little bit differently in 2024.
Microsoft earnings happened today, right at
Oh,
the
did
close.
they? Oh,
Yeah,
interesting.
yeah.
Microsoft, we will keep an eye on all day. We will look at them. I love earnings days personally. There's not a single earnings day that I can remember that was bad. They were all good, and every single prediction I've ever made on earnings has been good, ironically. It's hard for me to say that because I'm like, it's unbelievable, but it's all recorded. Every single bit of it's recorded. If somebody ever, I would love for them just to look through all my videos and try and find something. Try and find it, you know? Like give me the time of day for crying out loud. But no, it'll all be in the video.
This week, in 2 days is Visa too, so Apple should be around the corner in about 9 days or so. So
Mm-hmm.
next this week or next week.
Nice. Short term, there's a little B point up there. It's insignificant though. I'll put it like grayed out. I mean, anybody that was going for these under B points could be still going for that one, but I wouldn't suspect it to be too much of the agenda. I think today the agenda is to make sure that everybody, all the ordinary people, do not have the short. And when they have dried up, it will come down. I'm confident. But it won't be with most of the people. That, mark my words. And you know what the it's a contingency. It's I know the institutions will work hard at making this the case. And if the people do not get out of their way, it won't come down. It is a matter if the institutions get their job done too. And we get to see every single day, every single area, every single high, whether or not we can keep ourselves exposed or not. Um, like I said, there will be more opportunities to find that hedge. I think it's going to have something to do with this blue line, as a matter of fact, which is too much time for a lot of people. Um, if we went sideways to it, there wouldn't be enough time in the day. If we go down to it before the end of the day, there's a good chance it holds initially before breaking. And I'm like, the objective of the big players that I say brought us all up to here, from what I can see, they're thinking about how to make money on a hedge. And it involves them thinking about exactly how they can get all of the people to be interested in trading inside of a really crappy tight knit range. A lot of the people are going to find comfort in trading inside of the crappy tight knit range. And they count on it. I'm starting to see it's humane to do it, and the institutions count on the fact that people will do it. And like this right here, like this is like right in here for entries, the worst place all day to make entries. Like it's not red zone because it's bearish. It's red because I just wanted to highlight it that it's dangerous. It's disgusting, you know. And that's the way I look at it. And this one here too. This is one that's associated with it. It's not so much a bad place to trade, but it's associated with this node. A lot of the people have been placed in here. Is the way I see it. It's like the pen at the end of the day. It's like the pen at the beginning of the day. Remember when I'm talking about the imbalances? The imbalance, they keep everyone contained at the point where, hey, if everyone gets out of control, we can add a little bit of pressure on the bottom. If they get out of control to the upside, we can add some on the top. Keep everyone in the middle until they dissipate again, until they stop working together. And as soon as they stop working together and fighting against each other, who can come in and swoop up control? The big players that have all the money. When everyone's fighting each other in these little crappy ranges, they can come in and just take everybody out. At least that's the way I see it. And seems to be quite common that they show us this show of force. I call it a show of force because it's like it's a spectacle when I see it. It's a display of events of like everyone in their inability to see value in the range. They all think it's going to be like this forever. And then out of this produces volatility. But the brokers won't tell you that. They'll just have you squirm for some reason. And the other indexes are doing something completely different as well. we got the Dow. The SPY running into almost a significant 188, looks like, yeah. Not really feeling it too much there, though, it looks like. And then there's the one thing, Microsoft going down. And, you know, that's partially why NASDAQ could be going down. And it's like, if you look at this thing, you know, no wonder the people that are in it are considering taking some off, like, because at the end of the day, oh wait, hold on, you sure it's today? It says, it's on the 30th here. Or am I?
Yeah, let me check.
Yeah, check that one. Let me check the website I check as well. For earnings. Earnings. Okay, maybe this is wrong. It could be.
It says, yeah, January 22nd. Microsoft.
Huh. Is that a different year?
No, I got it on Yahoo Finance.
Oh, that's weird. That is weird. I got it over here on January 30th as well.
Strangely.
Yeah, we'll look at it today anyways, see what it does. Doesn't hurt.
Yeah.
Like, it's certainly moving differently than the NASDAQ. I'm like, what? Maybe, I don't know. That's weird. It is possible that they get it wrong. Well, clearly one of them has it wrong. You know?
It just seems weird to have earnings on a Monday, but that's what it says.
What's weird is to have it on a Friday. Usually they don't happen on Fridays.
Yeah.
This has got to be near the 61% retracement as well, the entire move. The other grayed out B point is hit. For those that are targeting it, you can profit there.
Was December 2023. Or no, yeah, it says 2023.
It should be it should be 24, yeah. I'm still getting used to it too.
Well, it says, yeah, scheduled for January 30th, but
23 though. It's 24 now.
yeah, I know. Well, when I Google it, it says January 30th, but when I look on the Yahoo Finance, and it has been today, so hell knows. I don't know.
I don't know. I think that it's a very serious thing to provide information wrong on a financial website. Like, nobody does anything. Like, I mean, we get penalized in life all the time for just being out of line a little bit, and they can do that, and I'm like, oh geez, they should have to pay us. But no, that'll never happen. Because I mean, who's on the other side of that? Who loses? Well, it's like, it's ordinary people that check Yahoo, and I'm like, it's like, what the hell? It's like everybody takes a hit on their end, but they just get to say, oh, whoops. It's terrible. So this is the low of the node again. Basically, the 61 had a negative response. What we've been seeing a lot of lately is actually a 61 to a 61. coming down to hit the other side of the node again, could be on the table. I can see that the 61 is exactly in line with that low of the node. Obviously the range here could be used a little bit more first as well. This area in here. And it reminds me somewhat of its ability to make a left shoulder, a head, and a right shoulder, but also have a left shoulder, a head, and then a right shoulder, where basically both of those patterns show us that they have three extremes, and the biggest one is in the middle. It's a great pattern to make people think that it's going to move and then not move. Because it's two patterns contradicting each other. Now in this case, the last one to happen is an inverse, just like it was last week. And it did go up off of it. And I'll show you. Like this. So we had a high with a higher high and a lower high, you know, and then a low with a lower low and a higher low down in here. And that's how we started one of those triangles. Doesn't mean it's going to have the same kind of impact as it did the other day. What I see that it's done now that's really, really kind of dangerous is this line has been formed. Yes, the people of the 61 have been attacked again. The yellow line getting a lot of attention. Does it have to break well? Well, it's in the middle of a range. It could break into chop. So it doesn't have to break really well at all. If it does, then the low of the node is something of interest next. We know that there's a pretty significant 61 exactly right there. Big time, big time. It's funny because just because this trend is chopping here doesn't mean it will break from here, but it will break. And that's the impression I'm getting. I'm getting the impression that they want to stop people out and then break the trend. Because you could expect that many individuals will have studied last week's movement and they're going to try and make it work for them. And no, it's not going to work for them. They had to anticipate it, and that's why the market respects them. If you try to look at what the market's done in the past and make it work for you, that's the most ordinary thing in the world. There's no anticipation in that at all. There's no like, hey, I demand the market makes these moves and fills these targets and hits these expectations because I understand what I'm doing. You know, it's like not no maybes, no nothing. You know, and like that's what I like about it. Is I don't maybe's not my part of my vocabulary, and if it is, I'm not taking action on it. You know, there's a lot of maybes in the middle. You know, like I don't do maybe at all. I don't take action on maybe. I only have certainties, a series of certainties, and that those are the only things that I will ever take action on. You can see that if you look at the things that I've done, it's only on the absolute expectations. They're based off of absolute expectations. First, the expectation comes because of the clarity, and and then you take action on that expectation. And only because it is so clear can you see yourself a part of it. I mean, this is the system that I rely on every day, and it involves understanding first. Understanding so that you can see the clarity. Clarity so that you have something to work with. And it's a very, very serious thing. It's a good It's a good thing. It keeps you sharp. Keeps you good. Oh, is this the next 61? Not quite. Not quite. But you can see how it like came and it, hit the 61 here, right? Look at that. 61. This is the 61, right? And it came down off of it and then stopped everyone up. Stopped everyone out. And then it broke the trend to get to where? The exact target, ladies and gentlemen. I'm filled. Like that. I market filled it and it screwed me on my order, but whatever. I was explaining it at the same time. Profit's profit. Side account. Building the cushion. Like I say, how many B points have I taken off today already? I don't know. A lot, but I don't count any of them. Let's start again. Fresh. 0 B points. Because, like, I understand what it's like to be new, and I'm like, well, you're not missing anything. If you think you're missing, it's like, oh my goodness, there's so much yet that hasn't happened. We will see. It's a matter of being ready. It's like a sniper, it's like a sniper. You got to look at it like there's many components that are the same. Like you've got a target, which is like your opportunity, and oh, okay. We're approaching a level that could have a little bit of a bounce back to the 188 200 and the VWAP potentially, but that just means if you're short, no stops are to be dragged below that level. Honestly, if you drag it below this gold line, you probably get smoked out, not gonna lie. Like that. So it's like, it's very, very much like it's very clear. You know.
There's no Microsoft earnings today.
Okay. Good.
But
Why the hell? I bet you.
I know what Yahoo Finance is
It's
like.
like,
I've never been wrong yet, but it's screwing me over. So
yeah, literally, like,
weird.
what the hell that is? But
It was damn official, but it's the way it is.
I
It's
know.
definitely tomorrow too, eh?
Okay, is it in the morning though? If it's in the morning, then it's
Half hours,
basically
half hours.
today. Okay. Yeah, because Microsoft, it's like Yahoo Finance. That could, who somebody with like a gajillion shares in Microsoft might have opened Yahoo first this morning and thought the same thing and thought, well, hold on, I've just sold like 75% of my position because I know the next earnings is supposed to be bad, and it's not even now. It's so weird though, eh? Like, what day does Microsoft not participate in the agenda? I mean, at the end of the day, it's a huge company that I think is great at going up with the market when it's going up. It's like, are they not at all time high? If they're not, I'll be,
Oh, yeah.
yeah, they're totally at all time high.
They're almost up to $400 right now.
Yeah, they hit 400.
Yeah, they're
This,
like 396 right now.
yeah, they hit 400, which is intriguing.
I don't think they've hit. Oh, have they?
Oh
Yeah.
yeah,
Oh, yeah.
they hit it. They hit it.
Okay.
They like grazed it, but yeah,
Yeah.
which is the 288. I mean, we got a 261 at 391. And then there's like this big B point here, which is like we're at a 161 almost. That's an interesting chart. It's not something I would jump all over because it's really far from the trend still. It could there's games that will be played on the Nasdaq until it's ready to make its final big dump, and I think that's got at least a month of playing games with people. Like all the original short traders that are like not original, but aggressive short traders, the ones that are like, oh my god, it's high. This is the first time we've crested all-time high. Let's short it. It's like those people, they need a month before they're just in so much pain before they don't try again. And that's the irony of it. The institutions know of these people. Like they know that they exist. They prepare for them. Like we can count on the fact that they exist. They need to be dealt with is the way I see it, and that takes time and effort, not on my behalf, but on the institution's behalf. Maybe one day, but not now. At the end of the day, we have a luxury to not have to worry about those assets that can't be sold and have to find a hedge. I bet you they get such that the look I used to get the look when things at the first start of trading, when you see your manager from across the way and everyone's having a bad day and he doesn't want to make eye contact with anybody. And but when you do, it becomes the look. And at the end of the day, it's like it's a look of disappointment. It's like yeah, no. It's like it reminds me of when I was like in a relationship and I was in like fighting with my spouse or something and you look over and you see them staring at you and it's like, oh man, you're in the wrong. I'm like, yeah, that's the kind of look. And I'm like, what makes that happen is if you go into the end of the day not hedged, not profitable. You get the look. If you go into the day and you don't have control, you have to deal with these emotional bombardment from other human beings. That's what it's like to work in finance. Emotional bombardment. That's the way I saw it, at least. Because everybody just drops their emotional baggage on you. Even when it's good, everybody has their like incredible like that whole woohoo idea. Like I'm not a woohoo guy. I don't go woohoo when things excite me. Like I don't get stimulated off of screaming and shouting. At the end of the day, it's very hard for me to do that. I think it's trivial, but and it takes your focus off of it. Like I've felt stimulated so much before where I should be taking profit that I was too busy feeling stimulated that I didn't take profit. So it's like, come on, never again. I'm not like that anymore. I won't ever be caught like that again. It's like no, like it's foolish to have emotions in trading, and that's the way I see it. And it's like we don't need to learn that lesson the hard way. And what does the emotion do for us that the money doesn't? I mean, once you're done trading, you can go and be emotional with the money all you want, but it has a serious negative implications because it takes time to feel emotion. And like I've noticed, like even if it's good or bad, you're sitting there, you might like your eyes might like wander down to the keyboard as you're feeling that emotion because it's like it just knocks you off guard so much. And I'm like wasting time. I mean, my enemies have an advantage the moment that I'm doing that. I lose control. I stop thinking about exactly what's clear to me. I stop thinking about what's going on, and it starts to become about how you feel, and that's not going to make you money ever. So I'm like, very much so. That's one thing that I think that if you can't get that down, you shouldn't even begin. Like if it's about being excited because you trade for the thrill of what it's like to be up, then you will seek that. And I cannot work with people that are in the business of doing that. It's true. And it's hard to get yourself out of that because you want to know what? It's human to be like that. It's like, okay, you get involved with trading because you want to make money. Now, put all of that aside to focus on doing it right. And but wait a second, that doesn't feel good. It feels like it's hard. It feels like I have to spend a lot of time. I feel like I have to work at levels that treat me badly. I have to go days and days out trying to catch the low for a move that's 5,000 points away, where I can't even remember how many days I've been trying. Where every single day it's, hey, you caught a trade and it went up and now it came back to get you. Hey, you caught a trade and it went up and now it came back to get you. Hey, again, 11 times in a row, do you still want the target? Well, it's even lower than it was before. You haven't lost any money trying to get it. It just involves you getting that position because you see the value in the trend break. And if it takes it all the way back and repeats this process 11 times, but there's still a B point up here, but there's still a target up here, but there's still an opportunity to take profit up here, it's difficult for some people because they view this as difficulty. If you do not view this as difficulty, then it will not be difficult. If you view this as something that is supposed to happen because it is part of the day, it's a lot easier. And if you look at it like it's something that everybody else can't go through except for you, it makes it easier. Like like imagine that. Imagine you are doing an activity that nobody else can do it except for you. And they're all just if you've ever seen the look on people's faces when you do something where they've said, "Hey, you can't do that. Hey, the employees aren't allowed to leave this area. Hey, this can't happen." And then they see you do it and you're successful at it, and they thought it could never happen because they would never leave that range. They would never leave that mentality. And I know what that's like. A lot of people don't even know what that's like because they don't chase it. They've never seen it. They don't know what it's like. They don't know what that is to formulate. But now every single day, like I'm waiting for those people. And it's like And only if they knew what to look at here, if they saw what they're missing, it would be huge, absolutely insane. And now it's to the point where, like, I'm like, bring on tomorrow, bring on today, because whatever we have to do, so long as we're not in the middle, I will find opportunity. And every time it's left the middle, has there not been opportunity? Have I not had something to say about it every time it's left the middle? Which is interesting because I have. And at the end of the day, I have something to say about it now. We're approaching a blue line on the 61 again, where they are weaker than they ever have been before. Most people think that the more a level is used, the more strength it has. That's in the future it will be that way, but it's not that way right now. I'll tell you when it changes though, because I will notice, and I am confident I will notice. Absolutely, just like you're confident that you'll be looking for the red light to change next time you're driving a car, and because your eyes are placed on the light, you're very much guaranteed to receive the information, right? You know, I feel that clearly about it. That clearly about it. That clearly about it. Like no ifs, ands, or buts. And I'm to the point where I'm like, bring on the people, test me, try me, because I even added, I'm not an entertainer. We're not doing this for fun. We're doing this because we're doing it the right way, and it's serious, and it's a very much. There's one way to do it, and if anybody starts to succeed, they start to slack, and they and I'm like, I don't know, I don't want to be too hard on everybody, but it's true. I want to make sure that everybody is going to retain the gains, maintain the gains, and obtain the gains. It's all about that. And it takes patience and discipline to first put yourself in a position where you can fight for it, and then it takes patience and discipline to fight for it, and then it takes patience and discipline to keep it after you fought for it, because it's easy to take the money when you're right after it's been tough all day. You want to just give it to yourself, right? A lot of people do that. That's why they make it tough, because they know you better than you think. They know that if you fought for something all day and they give you a little bit, they give you 1,000 or whatever, take 70% of it away, and then they put it back up there again, there's a good chance that you'll take all the money and you won't see 3,000, 4,000, 7,000, because people already think it's high. To hold for even higher, you can count on most people out. And every day that I see this plan out, like, unfold, it makes it clearer and clearer that there is an agenda of the people with the money against the people that don't. And yes, in humanity, it is seemingly about the people with all of the money taking it from those that don't. And now they don't even see it happening. They just say, I'm going to open a trading account obliviously and get involved with no information because I think or because not because I think, because I feel something. Because they're not thinking about anything. Because if they were thinking about something, it would be a concrete mathematical or concrete something that you can prove, first of all, has had um, value in the past so that you can value it again in the future, and that there are not other outside factors, like other indications that could be trumping the one that you believe in, which is the case in many cases. Because if you only look into one indicator, what happens when we change? Or not one indicator, but one indication. What happens when we change? Because we will. And I also want to step up to the fact that if anybody finds me any indication, any pattern, any single indication, I'll find you 10 times at failing. If you're like, all right, this one, post it in the chat, and I'll find you 10 times right now within half an hour. Like, not tomorrow, 10 times right now. And yes, it can be any indication. And that means all of the indications I've ever said work, I can find them failing. So just keep that in mind. So it's not just one strategy like everybody seems to have. Not just one strategy. When I hear I have to learn your strategy, I do die a little bit inside. Not gonna lie. Like, cause I'm just like, you think it's that simple? No, it's not that simple. It's not one strategy. It's not one ticket that gives you a free ATM card. It's like, and I'm like, how hard it was for me to get to the point that I'm at where I can see it so clearly. It reminds me of like, yeah, right. I was gonna say when I studied, yeah, no, I won't even go in that. But At the end of the day, it's it might seem like it's easy. Like I can pull these green dash lines out and they hit very, very quickly, very, very swiftly, very, very accurately. And at the end of the day, it's not always going to be the same way, and we'll have to adapt with the market. And that's what I look forward to. I look forward to being able to adapt with the market, and I'm confident that I can adapt when the market changes, and that's where the money is. Because think about it, when you buy into a long trade, is it not supposed to be low or down, and then you capture the change, or no? Is it not the business of capturing change? How do you capture change if you don't understand it? And why does everyone take action before they have understanding? You know, a lot of people buy Tesla and then figure out why they're in Tesla by reading the news after. You know, it's like I bought Tesla and then you go in and it's like let me find a news article. I know I'm down right now, but this news article says blah blah blah. I'm like, well, no control. I don't like that. I don't like that. So I teach people to have control, to not, feed off of other information, to take, the indications as what they're trying to tell you and to really like be able to read the map accordingly. Like I say, it's about being able to navigate through the market's changes and understand them clearly. And like right now, is it not true that we've been going sideways? And unless you like this kind of opportunity, like do you want to trade a 20-point range? It is tight, right? In this area, this node is 20 points. Everything outside of the node's ever been wicks and spikes. We're closer to ending it than to beginning it, I am confident. So you see the idea of us coming back to this middle level? Sure, we may come back a couple more times, but we're going to find a new middle somewhere else sooner rather than later. At least that's the relay from the Nasdaq as far as I'm concerned right now. The major consolidation coming to an end. And of course, it's very triangular. It's like if somebody just sat down at the computer right now, like they would find, if they connect the highs and lows, a big triangle. Doesn't matter really how you do it. It's very triangular. I am more interested in the yellow line breaking than anything, but I think it could be a fake break. That could add to this looking like more of a consolidation, sure. But we're going to get better at leaving this node soon. Like I said, one or two more times to come back to the middle is fine, but I don't like to be part of those times. I don't like to be part of the last times. You know, not unless it's outside of the triangle. And that's just in this market environment too, of course. In this market environment, this is what's safe to me. And when it does that, what have we noticed in the past? Is it capable of making an S wave out of the confinement area? Basically, it means that anybody that's traded inside of this node, right? How do you survive if you're long or short? Does it come for your stop here on that move? Or what about this one? Do you get overlapped at some point as a loss in either one of these? So option A or option B. So everybody that's put into this gets basically an emotional roller coaster where I think they're all trying to guess which direction it leaves this consolidation. I can see that we have a spike on top of it. If we left out of the bottom first, it would be easier to continue, but it doesn't matter because at the end of the day, um, I think that there will be a move back to the range that will be a little bit clearer as well. As a matter of fact, putting the spike on the bottom, it's a contingency. I know that in the event that we put the spike on the bottom, these B points will open up. The blue and white line is something I do want to see at some point. A level that's a very, very clear rising wedge like that. Like you could say, like that. Played out really well. Took back most of the pattern's value. It's almost like it started again on the bottom, did the exact opposite thing, created a bigger version where it continued to do the exact opposite thing, and then it had the audacity to create, and there's that spiking out of the bottom almost, but there's that more rising wedges in there. Maybe it wasn't that large, but maybe it was just a smaller area in here that could be considered a rising wedge, which is fine. But it too went out of the top. And we're in an area now where wicks and spikes have only existed out of the bottom of this node. Two seconds. So we've pretty much done the same kind of spike beneath the range that we did above it. The 61 led to way beyond the other 61 and blew out at the bottom of the node. This line becomes a more, it's not that it needs to break soon, but it is the trend until it breaks, so I'll make that red yellow. The blue and white line is definitely something that's basically and it's like an untested level. That's basically what I look at it as. It was tested on the short term here when it passed it, but nothing really significant for the size of it. It's a little bit more longer term than our average level. We can also apply fibs. The underside of the triangle definitely finalized with the with a move there. I like to make those purple because they're neutral. I like to keep them associated with the triangle. We know that that's the bottom of the confinement area there, and it was triangulating. You know, those are two facts that I can't take from the situation. You know, they're definitely going to be the case. We're at the 141, you know, levels that typically are notorious for being the most effective, the more effective ones being the 188, 200. Ironically, that's close to the blue and white line. The 161 is the next major fib coming up there on that sequence. We've got some bigger ones we could put in there too, where it just means it seems like it's farther, but those fibs are actually intriguing. One thing that I like about when I put on two different fibs at two different levels that are two different sizes, when I can see that two levels, like these 261s over here, they actually line up like that, that's intriguing to me. So what I like to do between those levels is I understand that there's a 61 and a 261 and a 261, and I can mark them. Oops. And in the future, these ones will be easier to take off. I do think that they're a little bit like this one here is it's attractive to put on. I can leave that as like a smaller green zone perhaps, just so I can remove all those levels. We know that between the 188 and 200, and between this, we have 261s. So I can even write in there, just to make it clear. Oh, is that right? 261 on the short term. Okay, that's interesting. So when it comes back off of the 141 to the 100, I've noticed in the past that it struggles to actually get back to the B point. We could get something like that. Oh, whoops. Not incredible movement though. I'm not a huge fan of it around here, to be honest, but It's making its spike out of the bottom seem like it wants to be fair. I don't think it wants to be fair here. I think it wants to be a little bit tougher on the long traders before breaking the yellow and red line. Because I'm like, how do we make it to 1600 without breaking that? Well, we got to go down pretty hard to buy some time with that line. If we got to this level, you know, it'd be roughly to 1 o'clock when we broke that. When we would break that, sorry. But anyways, this could be like a 1, 2, 3, 4, and 5 going down. Well, I mean, it's not like it could be. It is, sorry. 1, 2, 3, 4. This is the fifth wave of what we have been doing. Doesn't mean it has to work like every fifth wave we've ever seen, but there are 5 waves. And when we have 5 waves, the interesting part about it is we can connect these two levels. I make them a yellow line. They deserve to be a yellow line every time. Because it's like, it's not a matter of it has to break the yellow line every time. It's that it usually does. And if it doesn't, that's incredibly important data. Like, why on earth wouldn't it? You know, it's like something must be compelling the fifth wave from failing, or sorry, it must be compelling it to fail. And if it does, I mean, I could see that we've got 188 down here, and we've got a blue and white line down here. Like I said, I'm not super interested in being a part of it, but seeing the data on whether or not a simple trend like that can break is building some understanding of the environment, in my opinion. And I think it's important to spend time developing and understanding. You know, you can trade it with lower size and stuff like that, you know, but it's not as safe. And personally, like I like to make sure it's understood. Everybody has a good explanation of it, especially if it's not worth taking and it's clear. Like if it's not worth taking, then it's going to be too quick usually, and it's like, well, you can explain everything very, very clearly on these very, very small environments, right? And then when we see bigger versions of the same thing, it's easy for me to reference, you know, what happened in these environments. Like right now, this is like a fake break. Basically, we tried to break the yellow line and we couldn't. It's being effectively tough on the people that are trying to go long right here. Like I said, right? Like it's a slap on the wrist.
Morning, guys.
Yo yo. Morning.
There we go. I'm push to talk now.
Word up. We have the 141 right here. Basically, I've noticed the 141. Its major role. I'll tell you the most profound thing that I've seen with it. When it makes this kind of 141, right, and comes down to hit it, it doesn't mean that there's not levels above it still. You know, like in this case, there's levels below it. Like I'm using an example for a W when this is an M, and we've come down to hit the 141. And basically, I could do the same kind of example actually. Why not? So we have like an M. Basically, we've come to the 141, and if we hit this B point by hitting this 141, it's not a huge move, right? But when we come down to these other levels that are otherwise more important in the future, we only have to come back to this point, which is weird because you would think, like, you know, this level down here, it's designed to come back to this one. It's not supposed to be the level that we're at now, which is funny, and that's what we've been seeing. So I mean, like, if you've been watching the market, you know that it's possible for it to do that. You know that it's been a characteristic of it for it to do that. And when it makes it this much out of the other side of a range that's responsible for being the majority of the volume, we have two equal size spikes out of both sides of that range. And when it does that, it likes to see the middle. And I mean, one thing I would say is if you have a short or a hedge or anything like that, preventing it from seeing the middle is likely going to cost you your position. And that's the reality of that. But so it means don't drag your stop in its path of playing out bearish patterns or or bullish ones. Like let's say for instance, if you're going down and it's moving on a staircase like that, and you're short from the high, if it makes a move like this every single time that it does pull back, and it's basically, let's say it's the same distance, that distance is incredibly dangerous to drag your stop within the extreme. Obviously when you hit a level that, you could expect it to be a final reversal at, and it does more than that average pullback, you know, it's it's potentially going to end up as a as more than that average pullback, as a new trend entirely. So right now it's like it's doing that thing again where the 141 is trying to come back to that level. It's not quite hit it yet. There's a little gap there, but it's all just very, very small movements that we could see a lot more of throughout the day, given the fact that this isn't the first time it's showed us this, and it's kind of continuing with its ability to show us this 141 is important thing. Because I mean, every day if we spend 15 minutes not having broken this level, you start to look at it and remember it, and it's like, oh, well, geez, I want to do that again. Well, I know what this means. This means that when we get back to actual levels, like the gold bar of 261s, so 261 on the high and low of this gold bar. Easier to understand that way. Another thing that I can see that it has done is it's used a confinement area that's relatively the same size as what we've had at other confinement areas throughout the day. Um, when we pull back, do we pull back this much? You know, and it's like when we're not pulling back that much, how much are we pulling back? This is all pre-market movement, so may not have the same kind of ability as a market that's open. Another thing that's kind of intriguing is unless the triangle is considered smaller, it's never been retested. It doesn't mean that it has to be retested with urgency, clearly, because it's been making two of the same moves on the short term, effectively. Like it did in there. Kind of, almost like it was trying to make a smaller version, except this is higher. You can see we're making higher highs and higher lows, which ironically is what we do when we do this. Smaller versions are not something that's incredibly effective to do that pattern though. That's a pattern that we can see it happens on a large scale and is most effective on a large scale. in this environment at least. That was the one that was being pushed the most when we were rallying the most to begin most of the rallies. And I'm not going to say that that wasn't the intention of somebody that had an impact on the market, was to move it like that to get the best effect for themselves. That is what I saw. And today is spent making as much money on hedging as possible. And I think that it could be a multi-day hedge even, but ultimately I think that it will continue to be difficult for long traders. Not so much the ones that are in from before, but the ones that are trying to buy in at all-time high. And I mean, you wonder why. I mean, it's quite obvious that you know, the time for the big money to buy is not at the high. So you think they're all buying up here? No, they're interested in being hedged up here every day. They will not sleep until they're hedged, or they're not doing it right. That's why they name themselves hedge funds, after all, right? The people that have the biggest funds better hedge them. Or what are you going to do throughout the downturns? It's not like the market doesn't turn down for you if you have an overall exposure to most of the market. Even if you're selective and you're, you know, and you've got most of your money parked in the best things, like the highest performing assets like Apple and stuff like that, and all those other major companies like throughout the years, because they have the liquidity. And even if you pick the best ones, right, there's still downturns. And if you're not in the business of making money on those downturns, well, then you're losing money. So, at least that's how I think. You know, at the end of the day, you know, you have to be in the habit of hedging. And today, number one, you know, if you have a hedge or if you have a short that's even just a small short-term target, you know, it could be like a small short-term trade back to a triangle or whatnot. I think that it would be worth keeping some in perpetuity with the expectation of it getting stopped out. You know, whatever you do take off is going to be a profit, but the rest can be held into like an insurance policy. So this is the first green bar. The all levels that are all subject to potentially threatening the red yellow line. And then I think about that too, and I'm like, well, tell you one thing. These levels are great and all, right? But if we get back to this level, so before here, it's tough. It has to get back to that level before that, and if it doesn't, it will have to break the entire downtrend in order to get there. So it's like an ultimatum, where basically it's on a time limit, where we know that in the event that it passes that time, which is basically 11 o'clock, having not hit that B point means that the trend will have to break in order to get there. So it doesn't become just about one level anymore. It becomes about what level will cause this trend to break. And at the end of the day, right now we have a VWAP around this area, and it's not particularly. It's the VWAP that we were using before the close, in the consolidation that there was before the close. And what that is basically showing is all of the volume and its average is at that level for the overnight sessions. And that level provides two other ones. And that's my main point, is that we're coming up to one of the extremes where lately, and I've seen this going into the video that I'm making on the weekend. It's crazy how much they were a big role in making big spikes at the bottom. Like when we started this trend, it was like we made two huge spikes like that. Basically, if you had orders set at the 188, they should have been filled. But at the end of the day, I think they're going to get a lot more flack than that. Usually usually it's not the first test that's the last, especially when we have so much time with the trend. But I do notice that these extreme VWAP bands, they're a little bit more attractive than they used to be. That's for sure. Because we have the ability to move to them now, which is something we really didn't have when we first got to 16,000, ironically, which now we're above 17, and the test of the blue and white line was something that was very particular, but it's gonna overlap it to make it seem like it's not something that was absolutely particular. All moves that I consider, warming up for them. This is like a show of force, because you see how precise it was to test that level. Like I said, it's not going to be the last time we'll see that level, but a very precise point all the way from back here. Watch out for this too, because at the end of the day, the B point is obstructed now by this giant node. Well, it's not a giant node, but like this is what it looks like. It is a node though, and it's a node that represents the volume that we had in here. Basically, everyone that traded in there is represented by this node, and that's interesting to me because if I was to take another one of those bars like I did before and just overlap it onto here, you could see that just quickly how much time is spent in that middle area and how little time is spent outside of it, and any movement that comes outside of it comes back to it as quickly as it left it. Kind of interesting. Until it leaves. Now, of course, when it leaves, one of the trends that is confining it will have to break. Now, like our other major triangle, this one left with no interest in coming back to it. This one bounced off of a 188 exactly. I also want to look at where we are in relation to the overnight consolidation. A very large POC up there. One that easily changed between these two nodes. So basically, we've hit two short-term B points on the very, very, very like smaller scale. Like here, there are levels that basically form as we pass them, and these have all been hit now. This final one about to hit basically cleaned all of its bases back to the tip of the triangle. And the thing that's intriguing about that is that triangle was roughly this size, right? Did it not like double out of the bottom, right? Basically, like it tried, right? And I'm thinking, I'm like, well, this one here, I mean, didn't quite double, did it? But what did is this area. And sure, maybe just like I drew that like this, I could draw it like this, and we could see it double. Whoops. Basically, and it did. So I'm like, having doubled this major one to this 188 200, the 200 ironically means double, but it wasn't considered on a horizontal angle. Just like I don't think this one was. I think this one is like it's a range that stretches a little bit on an angle. And of course, with absolute precision, one thing that meets above all is the blue and white line, the bottom of the spike, in combination with the 188. I think it's basically the result of both of them. And I think that these trades right here, they provide liquidity. I think we're going to get rid of all of the long traders eventually. It's just they're going to be people that are going to be uh, putting up sell orders at the bottom of the range, which is a result of what's happened right here, I think. I think we'll use those sell orders to push us to the 261. Also, I'm thinking about this environment could present us with a third drive. Now, the third drive can take as much time as the first two. Like you could do this, but it's a lot to ask usually, and it's usually the case that it's not that quick at dropping that fast, but we'll see. What is the case is that it's likely to be contained within that amount of time. So, people are wondering why this looked like it started working so well. The market right now is telling me that unless you valued these as the profit targets, from a long-term level, it's kind of putting people under a lot of pressure that haven't taken any profit at the B points. But if you have taken profit at the B points, I mean, it's a lot easier to continue holding in the event that they give you this. But remember what I explained at the beginning, is that we could go down off of the 141. So right here, this was the 141, and it came back to hit the B point, and then this is the 188, and it comes back to hit what? The 141, not the B point. So it's kind of interesting that here we are. It's valued the 141. And I mean, like, it puts it under a, like, if I didn't know that the 141 was going to have a lot of value from the 188, like if I didn't think that it was going to just come back to this point, it would be a lot more stressful to keep holding out for this one, having not taken any off there. But if you've taken off some there, you've even got the ammo to try and accumulate again for that B point in the event that it does decide to get to it. But it's a decision that creates more risk, and you have a free ticket to decide to continue holding, having paid yourself at the 141. It's a lot safer. Like in the event that you take the 3 trade trifecta off of a level like this, and you're out 2 of them by the point that it hits the 141. The last point, the last contract to hit the 100 is the safest decision, because at the end of the day, at least you're going to end up with 2 contracts worth of points. And if the last one goes to 0, you still have 64. And that's cushion building. Still have 64 points if you take off like the majority of your position at the short-term target. It's a little bit safer to continue holding the last portion, and you're paid more for doing it, and it's not like you don't get anything if it gets to your target, just like at the last portion. And every single time that you do this, you can increase the amount that you hold to the last portion, because you'll have more profit to do it with. But it depends on the trader's risk tolerance. You know, like the safest thing, as I said, you know, if you're doing the 3 trade trifecta, is to understand that we have 3 portions of the trade when you take 3. They don't have to be all at the same level, but you know, you can get that initial market exposure and then try and buy the bid on the other 2 if you wanted to, or you could get all 3 at the market depending on how quickly it's moving and how big the level is and how much of a response you think it's gonna have. Like if we drop really hard onto something, there's a better chance that it'll have a heavier response. But remember, the moment that we hit that level, I did say that we could come back to it too. So that's another reason to consider short-term targets more attractive. So here, we've got the first ignition candle. This is the first trend break that it makes. The first opportunity that it gives you to get to take some profit is in the ignition candle, and then we get the profit target, so that the area that you're actually targeting, the green dashed lines, and basically then you have exposure beyond the profit target and a contract for each of them. And that's one way to do it. But in an environment like I just suggested, where there's a high likelihood that they're going to come back on your ignition candle move and they're going to come back before getting to your profit target, well, taking off this one and just having your exposure to the target left means that you've paid yourself when it was profitable on 2 contracts. If the other one goes to 0, you're left with these 2 and the profit that you've taken. So it's like what's really interesting about that is because you've taken off the 2 contracts at a profit, the last one you can keep farthest down. You can keep a stop at the extreme. You can keep the stop a little bit farther because you've already paid yourself. And what if this one's going to be a $5 loss or something like that out of the 64 points that you've locked in? Not a bad deal. Just for that ability to not have to take another trade again, not have to put another risk out there again. Not that bad. So it's good to you know, right now we've also got the 3rd consecutive low, which isn't a consecutive low. It's a 3rd spike, 3rd extreme. Well, like yeah, 3rd extreme, and it's not exactly the lowest. What does prevent it from getting there is the 188-200 and the blue line. It did break the trend again. This is very much like a wave, or sorry, a phase A kind of movement. So we have, I'll explain it, like a preliminary support, they call it, is the part number 1. Part number 2 is the selling climax, automatic rally, secondary test, and in that movement we can see the Wyckoff. I'll show you. Basically, I think that there's variants of these that are constantly pushed out of the like this. Phase A is accurate, phase B is brutal and doesn't have to be accurate at all. But phase A, this sequence right here. Oh geez. It managed to do pretty accurately.
It wasn't a 3rd low on my CFD chart.
Was it not?
Looked like a spike in spring to like a 95% or something.
Mm-hmm. This is literally following. Not a candle doesn't touch the line so far.
That's pretty cool.
Even down here. That's strange. I'll take a picture of that. And what I'm gonna say is phase A can be accurate. Phase B will show its brutality and could be bad or brutal or bad or bust, as in not work, like something's bust. I haven't heard that in a long time, but you know, that's another B word to remember it by. And it really does show, because I mean, like, let's say it does work in the best way possible. It takes big movements that are nice and juicy, like even nice 5-wave moves and everything, right? And head and shoulders to inverse head and shoulders and all that kind of stuff. And it shows us that. And then it gets confined into this like into this like tight area where it's basically like a big triangle where moves are very, very tight and everything. And then phase C can be an extension of that. But it's kind of intriguing that it wants to go through this far. You know what I'll do? I'll just drag this down. It is interesting that the 141 was the roadblock for that 188 initially. And it takes an understanding of a previous environment to do that, but I'm like, it's not really something that I would expect most people to have like understood. Like, do you think most people are aware that it comes from the 141 to the 100 and then goes to the 188 and can't make it through it? Like we have a normal M like this, and it goes back from the 141 and then comes back to the 188 and can't make it through. Like we've seen that last week. I can't tell you how many times. But you had to have noticed it. First you have to understand that M's are even a pattern and that they work like that. They're supposed to play out back to the B point. But the thing is typically it's all of this environment up here that doubles down before it's ready to do that. This is early in comparison to when it's usually interested in coming back. So what it does is if it puts a lot of volume in this area here, and we actually get to the spot that it's supposed to reverse, you can see it can cause trouble for people that are exposed from there. At least initially. And that's the it's kind of complicated, I guess, but it's not it's like the pattern is supposed to work from the 188 200. Like with no complication, it's notorious from working from this level. 2024, it's just not the same. It's changed. It does this now. I mean, this is an additional thing that we have to allow throughout the process of it creating this pattern. Because it just used to be dandy down to that level. And this used to be the target. Another visual example of how I could show it. But it's true that that is the B point, and it really, honestly never has really been tested, unless you consider it tested on that first candle, which I don't believe that many M's and W's have a D leg that is one candle. Like one candle down to the 188 and one candle back. I'm sure on the one like 1 minute like it would be a very, very hard pattern to see. I think that it takes more usually. If it's a really small pattern, they can happen quicker. But on these bigger ones, like I'm not allowing some one candle like dump to anything really work as a proper test. Because you know what it makes me think is that there's no liquidity at the actual levels that matter when it's doing that. Like there's no, and you'll see in the spike when it makes it that there's barely any liquidity in the spike. There's barely any trading in the spike, and that's not something I find attractive. So I like it when they're a little bit larger. And when I see them every single day and I see them and then they do this, they make me look at this for, like I said, 15 minutes every single time we see a 141 now. I'm like, I'm going to start to notice, and it's going to start to become a thing. I'm like, okay, now that we have that in the way, it feels it when we come back to it. So sure, it makes the 188 likely to come back to it again. And that's why we came back to it again. I said we would come back to it again. So, I mean, I would never choose for the market to do this because it's terrible movement, right? But this is what it chooses to do. And if you analyze it day in and day out, you'll start to realize that there's some things that can make the 188 prone to coming back to it again. There's some things to preventing the B point to getting hit. Like it's just taunting people, really. It's like with this is a level that it showed last week would work many times to get us back to that level, and look what it's done. That's another way to explain it. In a simple way, really. This is a level that has worked to get us back to here, and look what it's given them. I mean, that's not very nice, right? You don't have to be in to understand that that's the case, right? But even if you are in at that 188 200 and you knew it was going to come back, hopefully you did take something off there. If you reposition for another attempt at the B point, it's a riskier move, like I said. But if you kept your stop at the extreme, technically you weren't stopped out. So there's multiple plays that you can find value in there. Honestly, none of them are home runs. But it's like if you're going to force yourself to trade in this environment, I mean, well, that's the information I would really want everyone to consider. Personally, I do see this as something that gets people out of the way for the end of the day. Something we know has been quite popular lately, and I mean, it's not a bad thing. I mean, it's just the institutions, when people don't get to see that it's been doing this until the next day usually, because this movement's too much for them, because this movement's too much for them. And then it's like later in the day we've been seeing incredible movements. It's insane. Where to the morning it seems stagnant and slow and choppy and contained, condensed, triangulating. And it's like, what's weird about that is, look, it spends its morning here too, doing just a giant M and coming back to that point. Now, don't you find that interesting that the people, if they look at the previous day, they can go, oh, geez, guys, look at how much it came up off the 188, and it gave them no problems. Why so many problems today? Let's take this same shape. Okay, just to make it clear. This 188 200, right, is supposed to go back to this point right here, right? And it did. Now, today, everyone gets to see that information works so well for all those people the previous day. Now what's going to happen to the people trying it today? Well, they're presented with an M. It looks a little different, but yeah, it's a little different. But our M today is presented like this. And why didn't it come straight back to the 188 200? Like I can move this over and move this over. Do you see how every component is the same here? Like if I just use a drawing tool to show, like I'm like, okay, this is one move, this is two, right? 3, 4, and 5, right? So there's 5 moves and they all look like that. 1, 2, 3, 4, and 5. The series of movements that are required to make this pattern are exactly the same. Like everything from its ability to condense in the top and have a quick jab at the bottom, which is the size of the condensed area, roughly. It's pretty spot on, to be honest. I wouldn't be splitting hairs with it. It definitely doubled, and for what it did, and it's just little haircut, little wicks and spikes basically. And then there's this one that basically doubled, a little bit of a haircut. For what it missed on the top, like that, it shared on the bottom between this, and I'm like, that's fine. I see that a lot. And it's fine. Most people will think it's wrong because it's a little bit farther. No. You're just not looking hard enough. You see that it's actually the same on both sides, though. That's the idea. But everybody's so stuck in the pattern should work one way, and if it doesn't work that way, then it's not working. No, 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 no. It's just that's the way the market decided to do that pattern this day. And it's a little different. You know, like the 188 200 didn't treat people the same way, but if you caught it and endured the pullback, then you're in on this trend break essentially, which I'd be curious to see it go incredibly well. But let's look at the schematic here real quick, because you want to know what? It is part of phase B. Oh, 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 no, it has to be like that. Bam. Or am I crazy? Oh, I'll keep this handy. You know, it's not like the bane of our existence or anything, but if we, you don't want to you don't want to believe in phase B as much as you should. You know, it's not a it's a it's not something like that. Phase C is far away from where we are now. If it is to finish even remotely what we're doing, like think about how many times phase A can fit into phase B. You know, like what are we looking at? Like all the time that we've spent here, maybe roughly 2.5 times. You know what that's fun? You know what that's ironically is? That's 261 times the amount of time that we have here. Let me look. This, yeah, see the 261 over there? I think that that's suspiciously particular. Why is it the case that measuring on a time scale, maybe I'm a little bit off on my time scale, but still suspiciously close to the 261, and I could see that. Interesting. I'm like, if I can see a fact like that, if I'm like, if it is there, if I should be looking for the 261 roughly in that area, could the 261 be the result of the end? Could it be the end of phase B? Yeah, it could be. If you measure phase A so accurately, perhaps. And I just want to point out, like, these arrows right here, they remind me of a post that I made. Here. But one of the last few ones. Oh. See how the 188 200? It was literally a ploy on advancing us forward. And they fail. The stops that advance us, that advance the core. So all the core long traders on this move can expect that to advance them forward. These are targets above on the highs that nobody has. They're new all-time highs. And I'm expecting these stops to trigger us farther. And they did. Much farther. That's where that blue and white line started. See? Let me see here. That's a different chart. No, it's not. It's this chart. And we've seen so many times how rising wedges can be the bottoms of these major runs right up to the blue and white lines, right? And let me just find something real quick. I'm compelled to show everyone this understanding that I have. And that is that, if I can find it, yep, right here. You can see that we've been in the business of making rising wedges on the bottom. Like the only thing I'm looking at right now, like this is my my area of focus. Like everything outside of this is black. I'm just looking at this triangle and how it basically blew out of the top and created this other smaller triangle in here, which blew out of the top. And it created these blue and white lines that it never it never tested on its way through. Like, I mean, a little bit maybe, but hardly. And it blew through and just continued this trend, and that was the way. That was part of the agenda. And that's a pattern that's not supposed to work like that. You look it up on Google, you won't find that pattern working like that. It's funny. And then they'll turn around and make the pattern work at a really insignificant time, perhaps, so everyone can see early morning this pattern really works. And then, come the open, it's doing something like that. Obviously, its positioning is really bad. Like, for instance, if we were to consider this one a rising wedge, positioning is really bad because it's at the bottom. Positioning of that same pattern higher could be a little bit more effective. Like, tell me that that's not subconsciously trying to condition people for that move to have an impact, and then when they try it, maybe it doesn't have an impact like it did before. Maybe it fails and gets to the B point, you know? Because I'm like, well, if there's a sequence like this, this pattern forming here is not the same value, in my opinion, at least. Because this one's below something else, this one's not below anything. It's suggestive that its presence can break the trend. This one, undeniably, will be part of whatever trend comes from the top. You can't take it from it. I can be like, you could say this is happening as much as you want from the bottom, but you always start your trends from the left, or else they go like this. And how am I supposed to use that in the future? So at the end of the day, it's it's really interesting if you think about it. So the trend from the left always wins. I mean, like right now we're in an uptrend, right? And it's like this was the last trend that had to break to end our downtrend. With that trend broken, this is, as a matter of fact, our new uptrend, and without it broken, it will always be our uptrend. It's a fact. Now it's going to break. I'll tell you that now. Like 98% chance this line will break today. If it doesn't, I'll be very impressed. 2% chance it doesn't, sure. But 98% chance is a very, very, very high chance. Oh, did I take that viewpoint off too soon? No. So sure, with that B point being taken off, now we do have B points down below. But are we as developed as we were when we hit those B points above? Like these B points above came up off of the what? 188, right? And this one, where are we now? We're not even at the 141. The 141 caused, oh yeah, we are at the 141. But the 141 is where we caused problems before. Then we went to the 188 and caused problems. Then we finally got down. If you want to do this again in reverse, that's what it would look like. Not the most lucrative pattern in the world, I'll tell you. Could it be, like the other days, we're waiting for all the people to get out of the way so that we can make the actual moves of the day? Because it took... it's not too far off the time we are at right now, actually. Funny enough. By 12:30 we were moving. And then the day before, it's like what? 2 o'clock? Was it 2 o'clock? 13.25, or we were moving by 10:30, but I mean everything was amounting to coming back to that level by 2 o'clock, which is interesting because everything was right in the middle for 2 o'clock, you know, exactly right in the middle for 2 o'clock, right where it started, right where it stopped going up. And for that time, it went exactly sideways. Well, no, it didn't go sideways, but it didn't offer anyone any value that thought it was going to move anywhere but to this point. And everything that it did from this point either started or ended at it while it was doing that until this point. Nothing could get away from it. And that's a consolidation for you. Doesn't matter that it was expanding and getting better at moving as the time goes on. It's just rarer for it to do that. Especially at the time of day it was. Pre-market, it's like, yeah, good luck with that. We don't usually see that kind of movement in the morning. And then here, this was when it all began. And we could see that, you know, everything started 9:30 there. Literally by the end of the day, we were back where we started. This is power hour. And then the close to clean up that 8:30 report in the morning. And then it started that up then sideways. You know, where you could see first it was good at making pullbacks. It was great at making pullbacks. We did pullbacks on pullbacks. We were pulling back all the way up, all the way up. And it was good because like they did huge pullbacks every single time. Every single time they covered anything, and even if you caught any of that excitement, pullback, huge pullback, right? And then it became less. And then even, you know, we got that again, sure. It's like the same thing that we just had, right? But then what did we do? We didn't pull back at all. And we got better at advancing farther. Similar kind of movement. A lot of the excitement, a lot of the part where you could expect people to chase, they got wiped out before the continuation. So like I was mentioning with this one, so that's that point reversed at the 188.200. And it wasn't even that one either, it was a different one at the very, very bottom. But still, this B point is the new green dashed line. Does it reverse at the 188.200 as well? Well, I'll tell you, we're at the 161. We've come back off of the 127. So it's true that our W that we have right now is very clear. And it looks like this. And this is a 127. I recognize it as a move that has come back to the B point 100%. And the B point is the 100%, by the way. And it did get hit 100%. So that is, and it was off of the 127 that caused it. Like what's the resistance barrier responsible for bringing us back to this B point? The 127. And this one had a 188 that was responsible for bringing us back to this one. Originally, the 141 caused a roadblock. On this new one, the 127 caused the roadblock, which is close to the 141. I do want to take note that the 141 led back to the 127, and the 161 has now led back to the 141. So it's true that we've done this now. It's literally strange. Because usually what we like to do in a W that's effective for all market participants and everyone that understands its value is to just do this. And this is not the same as doing this. And when it actually gets to the target, because it's come off here, and come off here, it considers itself played out sometimes. Because it's already dumped that much, but at different times, which is kind of complicated, but I mean, this is what the market decides it is, and I see it like that to find clarity, and it is true that it does that, and we're seeing that now, and we could expect it because we were doing it on the way down. Now it's just gotten better at doing it. It's almost like less people are obstructing it from doing this. And it's like, what I see is that there is nothing else that it is doing but that. Like its primary motive right now is to make a W and play out to the last B point in the small short-term spectrum. And when it gets to the level like a 188 that's actually supposed to send it down, it may not work like this level. Because look at it. What if all the other 188 200s have in common that this one doesn't? Well, this one is right here, the worst place to trade. And if it doesn't work, remember that red zone from the morning. I think I've actually moved it. But still. So I see the next 188 as a trap. What's up?
Got a quick question for you, just based on just like a what do you call it, like a market watch sort of site for like stocks, I guess.
Mm-hmm.
I was checking out just like specific stocks, just financial institutions or whatever, and
Mm-hmm.
I just go into Market Watch just to read some like uh, why something crashed so hard, and I go into the thing, and instead of finding why it crashed so hard, I actually find like some key data points on the side, and it actually tells you the percentage of the float shorted
Yeah, yeah.
and the date. I didn't know that.
They all have float data. If you have that's level 1 data. If you just open up like Questrade, you should be able to type in any ticker and get like a like the float, the
Why have I not seen this before, man? I look at this
oh,
shit
you got to
more
open
often than not. Than
you got to open up the level 1 data. There's level 2 data and level 1 data. Level 1 data is going to have like the company name, like the sector, like the float, the bid, the ask, the
yeah,
all
it
of
literally
the
has like the
statistical
date
data.
as of December 29th, 2023. They
Oh,
say like 11 million shares have been shorted, which is 66.9% of the float.
oh
And I'm
yeah,
like,
yeah. You
the
can
fuck?
click a little refresh button and it'll tell you the float on the stock or whatever it is that you're looking at.
Interesting.
And
And that's on Questrade as well, hey?
yeah, yeah, yeah. Yeah.
Okay.
You should be able to like refresh the level 1. There should be a little refresh button on the bottom. I
Because
remember. Hmm.
yeah, like I was looking on TradingView, right? And I had this just like this little watch list of like 5 or 6 financial institutions or whatever, like just different funds. And um, one of them has been hovering between like 20 and $22, but today it's like $18, right? So I go onto the analyst thing panel on the whatever. I was just scrolling down and it caught my eye that says strong sell, but then I go and I try to research why, um, like what's actually going on internally,
Hmm.
aside from like their investigation or whatever on this specific company. And then I find on Market Watch, and they're like, the average is a buy. And I'm like, okay, well, now I really can't go on like that, obviously. It's like,
Yeah.
you know what I mean?
The
It's like,
market
what?
sentiment indicator. Yeah. It's like,
Yeah,
yeah.
it's like
It's
now
bullshit.
it's like,
Nobody,
look at the
it's not even
technicals.
anybody's job to monitor it. That's the impression that I get. It's like it's literally
Yeah,
like
all
if
these
it's
guys just send in their letters and say, here, post my analyst thing.
yeah, it's literally what it reminds me of is if somebody's just taken a moving average and programmed the thing to say tell everyone it's bearish when it's under the moving average and tell everyone it's bullish when it's above the moving average. And and don't monitor it at all.
And what's really interesting
Or
is that
hire
I've
somebody that
been
has no awareness
watching.
of the moving average.
Yeah, like
It's
I've
like,
been
what?
looking at this financial institution for, I want to say, a month or two now, and it's always been a strong buy on TradingView, but I never really look at that kind of stuff. I never really went any further than looking at technicals or just kind of researching what kind of company they are.
Hmm.
And this one specifically, I mean, they had a really big investment in like a Shopify type of store.
Okay.
And this Shopify type of store, technically, you don't need to buy the inventory because it's all online. But this financial institution that invested into this other company, they were obligated to buy like $100 million worth of physical inventory. And as soon as they did that, uh, yeah, like the shit just hit the fan. Like they dumped hard, and their financials look like shit. They're like 75 in the hole, and I'm like, all right, like all of a sudden everybody switches to like strong sell. And I'm like, hold on a second, like someone's really trying to set us up for some bullshit here.
Yeah.
I'm just like all these news articles and if you really start reading, there's so many people coming at so many different angles. I have to look at the technicals because you just can't believe nobody.
Yeah, exactly. Yeah, I'm like,
I'm still a buy. Not the strong sell, but I mean, shit.
hmm, interesting. This
Yeah, because
261 looks
the
like it's
main
close
thing
to
is
61.
technicals, but I
Hmm.
just try to challenge myself when I find companies and the news doesn't make sense to the technicals. You know what I mean?
Hmm.
So I'll pin it and then I'll come back to it in a couple months after I draw my lines and draw the profit target and blah 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 stuff like that and just yeah.
Yeah. So I did find something here, which is really interesting in my opinion, in a technical standpoint, where we have the fibs placed from the high of day to the low of day since the open, and that encompasses the whole movement. Basically, that shows us that the 61 is up here. And that's also at the POC. It's also at the highest volume node where there's been more volume here than there has been anywhere else throughout the entire day. Now, we have a W at the bottom. It's hitting a 188-200. There's a 261 that's in line with that 61 and the B point. Even if this pattern plays out or doesn't, it doesn't take away the fact that that 61 is there. Even if it plays out. So we know that when we had an M earlier in the day, it played out perfectly. Well, I don't want to say perfectly, but its low was perfectly the 188-200. Now, of course, it had a hiccup along the way, and in both directions, really. But the main cause for it to get back to that B point was obviously it tested the blue line twice and it hit the 188-200. But the main fact is the 188 was there. Now, it's taunting everyone right now with, oh my goodness, it's potentially just sniped that 188 on the short term. Is it going to come back to the B point? Just remember that this 188 was at the extreme. This 188's in the middle. It's convincing people to short at the 50% retracement, and there's no which way, if, ands, or buts about it. It's true. So I'm like, it can or cannot be good enough for you, but it's not good enough for me, and I don't think that it'll have the same result as the other 188s. And if it does, I mean, that's fine. It doesn't affect anybody that's still short from higher. Um, in the event that you're long from the low, from the trend breaks that we had here, from the red yellow line break in there, right? And you're long to hit the B point, so you still have some. If you drag your stop above that B point, there's a good chance you lose your position, which looks like, that's why I advise against looking at your profit and loss, because you'll see it cut in half when it hits that level, if it hits that level. So I think that ensuring that you take some off at the B points is what you've paid yourself, and whatever's left on the trade can be left flexibly, knowing that it's going to affect your account positively in the event that it's hit at the extreme. Like, even if you took 2 contracts and took one of them off here, and if your other one went to 0, what you've taken off here is what you've been paid. And to find comfort in understanding that that's what you've been paid, and anything more is for in the event that if it exceeds the profit target. And that's all that it's worth. If it doesn't do that, it's dead to me, basically. And that means that you're not sitting there hoping, right? You know you've been paid, and that's fine, and you know there's like it's asking a lot to ask it to go through the middle, so you don't want to exert energy on trying to hope for it to get through the middle when you know you've been paid, and you know there's no risk in holding. It's whatever you feel is just because you want more. And I mean, like, well, that's I associate that with, well, hold on, I don't want to be greedy, you know what I mean? Because at the end of the day, greediness, it does take it takes your thought process away from the trade at hand. So we can see right now it is kind of lunging towards the B point. But funny enough, we hit the B point off of this level before. Now, remember how that affected us last time. It meant that the people that were in from the extreme ran into this node that we already played out from last time, kind of, and it came all the way back on them. Is it going to come all the way back on these people? Now, you want to know what's funny about this? Is at the bottom it came all the way back, but it didn't come like like to the very bottom. Like if you kept your stop at the extreme, you'd still have it. And I think that same kind of treatment, they're not going to give them at the high here. I don't think it's going to come back so close that it'll allow them to keep their position. But in the future, when we hit this level, when we get into that red bar, it's going to go to the white one. And that will affect the most people negatively because they think that the thing that just impacted them well will continue to impact them. It's part of many people's strategies now. You can count on it. They're all going to give it back in a second because they won't change. They don't understand that everything's changed. And that's what I see right now. I see that the people that try to go for the same thing over and over again, expecting the same results, are directly under attack. People that expect change, not so much. I think it's insane to expect one strategy to work over and over again in an ever-changing environment. It's it's interesting to me. It's like they're saying, it's like, you know what it's like. Reminds me of, I don't surf, but you know, like it's like expecting the same experiences every single time that you go surfing. I'm like, how is that even possible? Do you get the same exact waves every time? I'm like, how? Show me 2 waves that are the same. I mean, and explain how. I mean, like you can't. So you have to understand the concept of surfing. Like you better be able to put yourself on the board. You better be able to, you know, do all of the things that make you able to surf well every time that you do it. I'm not a surfer, as I said, but I'm sure that there's technique to it. And if you don't know the technique, you might not stay on the board. And I'm sure it involves understanding something that you can do on every wave, you know, so that any wave, you know, can be surfed like that. You know, it's not like you're going to use a different concept or whatnot. But at the end of the day, you're gonna have to deal with different waves, and just like in the Nasdaq, we're gonna be presented with large and small ones, different sizes, but generally the same thing. Like I can show you how today's version of being able to do this is what we've just done. It involved hitting a 141, trying to get back to the V point, then getting to the 188, and trying to get back to the 141, really making it tough for the long traders. And now, for the people that wanted that experience again. Like they were literally going for that experience again. They were like, okay, let me see the 188 take us back to the B point. And now it's treating them the same way. It's coming back on them. You know, the people that got this 140 or sorry, this 188 at the bottom, they endured a big pullback. The people that caught this 188 at the top are enduring this pullback. So far it's a 61. Could it do another 61? A smaller 61, you know? That's a little bit more than a smaller 61, but you could cut it some slack. It is there. This level exists now, and it is the trend until we break it, which is intriguing to me because the other ones from the high, it's true, they can be readjusted, or new trends can be added. Curious about that. Of course, like I said in the morning, if you are short and you drag your stop below these points, you're subject to getting knocked out. So it's like you didn't want to drag your stop beneath its ability to make that spike. Because everything that we've done so far today has been part of a spike on the top of this consolidation or a spike on the bottom of that consolidation. Or it was part of that consolidation. And I'm like, well, now this is the first time. I don't even want to say it yet, because I believe it's going to be up here that's the first time that we can consider this over. Like, why wouldn't it be able to finish its S wave? Like, and this one is nowhere near as important, I don't think, because it's demanding that it did the same thing for the people again. It worked, and I think it doesn't work like that. Like all these people, yeah, they saw the 188, it worked out really well for them. I specifically said this 188 is not going to work the same way, and I led people on many times. But here we are back at this POC. We've created an incredibly large volume node here, where nearly every candle that we've had since we've associated with this level has returned back to this red line. So I like to understand the facts of the situation to develop an understanding, because that's the best understanding is built on facts, on understanding exactly what's going on, not preconceived notions, like I heard that statement. I was like, yeah, it is true. People have preconceived notions of what's going on based off of news, based off of what they think and feel is going to happen. But there's no substitute for actually understanding the technical analysis behind what's going to happen. And just like when you're reading a book, you don't expect every page to be the same. Yet you understand how to read page 15, you understand how to read page 30, you understand how to read page 345. Now you're not scared of it. Like I'm not scared of next Thursday. I will be able to read it just like page 345. It's whether or not, it's worth reading. Sometimes it's like, yeah, it's going to be stale. It's going to mean it's going to come back to the middle. It's going to mean we're not going to be moving very much until the end of the day. And I think that people have become so predictable that the majority of them have not even noticed that it moves at the end of the day. Like I think it's crazy. Um, a lot of the people they're conditioned to work, right? So they wake up and they come to work and they work at the beginning of the day and they're all there and it's tough for them. The tougher it is, the easier it is to quit. And and I can see that out of all of what I could consider difficult, like when the market stays tight, when the market stays slow, when the market is not presenting a lot of patterns, when it's doing what it's doing, you can count on the fact that people are dropping off. Most of their charts look like this, right? So how do you know it's going to end? Well, it's like when it's doing this, and a lot of people are just in here like that sideways mode, and it's just chopping sideways. And people can just label it as a range day or label it as a chop, like they don't end with trends. Because they've never been there for one to end, so they don't know what it's like to be in when it ends. And I'm like, well, I know that every consolidation that we've ever ended has doubled to get us to this point. That it's more than doubled to get us to this point. So I mean, like, come on, is it not worth double the size of the consolidation at the minimum? And it's not to say that you should position yourself from every single consolidation, but I'll be damned if it's not clear on some of them where exactly they're going to move. Like right now, it's true. This consolidation is not at the extreme of any trend. It is in the middle of many trends, and it's not going to be there forever. As much as it may seem like that, it's not going to be there forever. And I believe we're closer to the end of it than the beginning. Of course, what things could end it? Well, like, God forbid this trend was holding us down, right? And without it holding us down anymore, could we exit the consolidation? Well, it's true that that'll be one thing out of the way. And if we start to work on everything that's in our way, don't be surprised if we don't move this way, move this way, if we don't have anything in our way anymore. And that's the idea. If we slowly develop our way through these angles. Like, do you know that when we first met this level, like when we first got to this level where we're at right now, there was no node here. You know that, right? There was nothing here. There was no node there at all. We made this node here. And like there's nothing there. If anything, there was a gap there. You know? And this is no significant level. Like, what is this? The 41 or something? So it's like, it's very strange, right? Yeah, it's the 41% retracement. No 61% retracement or 50% retracement or anything. It's not even half yet. Not even half yet, like I say. So it's true. It feels the red bar. I mean, I can't take that away, but that's okay. Soon, we'll leave this range. I think we're in the process on the short term of retesting the most recently broken downtrend. It may have some impact in leaving the range. I think it's longing to test the this white line above, sorry, the VWAP. Effectively, there is a 50% retracement in there as well. And I wouldn't be surprised for it to get responded to. Which is like, a lot of people will think the red zone is supposed to hold us down. No, this consolidation is meant to hold us through the red zone, and I don't think it's going to do a very good job, but that's what it's meant to do. I think that whatever we do on top is likely to actually come back down, which is fine. This level up here, it could be the cause of it. And we could get a little bit past it just to touch the edge of that node. And I see there is a bar up there. This bar, I'm going to turn it up, because in the event that we touch that bar, I think it could be a very attractive hedge trade, if you're not in one, to come back to that node, depending on how and when we hit it. It's a contingency bar, because if we don't touch it, it's no good ever. And I could care less about it. But in the event that we do touch it, it's something that I could find attractive, depending on how we touch it. I'll definitely let you know what I think about it when we get there, if we get there. But the 61 is something of interest ultimately. And what would be interesting off of that is, in the event that we could get up to levels like that, I think that we would be capable of actually coming through this consolidation to hit this B point. Because it's true, you know, when we get on top of this, we have to get through it again to ever get to that B point. If we got it sooner rather than later, it would be finished forever. But I think having it open makes people short it, and anybody that's been short has been struggling. Just look what it's given. It's taken back so quickly. Hopefully they were quick enough, you could say. And that's not a very effective environment, is it? I'm saying that about the Bears, right? Like, oh, hopefully they were quick enough to take their profit because it was snatched back so quickly they couldn't do anything about it. I'm like, wow, it's true. And I'm like, well, that's not a control move by the Bears. That's not a state of winning. You know, so it makes me think that the people that are caught in that area are in a trap, and they've been fooled in taking a 188 that's underneath the 50% retracement, underneath the red zone, and their stops are put right in between that big gap. Like, where's the biggest gap on the screen? the giant gap right here and at the VWAP. So people would be putting their stops at the VWAP if they shorted this 188-200. I'm like, that just sounds like a mess. Like they're gonna end up volume in the node in the middle in no time, I think. But at the end of the day, I don't think it's something that really entices the best to be a part of. Like, do you think Wall Street's really making money in this consolidation right here? No, no, no. I think it's a trap for people that are essentially they've become part of the node now, and it's not a good thing for them. Like, I mean, since we've been here, how has it affected anybody? Let's say they went long or short. Well, hopefully, whatever profit they have had, they took because it's been a emotional roller coaster of how hasn't it been the case that if you went long or short at this point, did they not make you see as much of a loss as they made you see a profit? Like, let's say if you were long from there, and they were like, this is a profit up here, and then you go down to see that much loss. And let's say you were short and you had to experience this much loss before you could see that much profit. And I'm like, well, that's gross, right? And I'm like, I want to say ew, right? Like it's not an attractive place to be in from. You can't say that somebody's gonna go and show their friends, be like, hey, I got this area. you know? I'm like, tough, 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 tough. But yeah, everybody's getting stopped out now, and that's basically that they're going to look back and think, damn, shorting that far down into the range, below the 50% retracement, just because I saw a 188 work a minute ago doesn't mean it has to again. And I'm like, well, it's a tough lesson for a lot of people. The VWAP, remember? It's crazy. See, I would never do this to somebody, And the thing that drives me up the wall is that the people that have enough money to move the market like this are doing it to the people that would trade in that crappy little range down there. They don't know any better, and somebody's coming along doing this to them. And that's the reality of it, which is tragic in my opinion. More financial education should be taught in school, I think, but it's not. It's not. This move doesn't benefit the most people, I don't think, because if everybody noticed that it works so well here, if you tried that again, you lost your position if you didn't take money sooner than the target. And I mean, like, what? That's tough. Why would they do that? And that's if people were even, going to acknowledge that level was important in the first place. If they analyzed it enough to find what just worked to catch the low, and then they tried that again, they didn't recognize that they were catching the middle, right? That was the problem. That was the problem. And then now they all get to look back. All of them will look back and think, "Damn, I traded in the middle. Should have zoomed out a little bit." It's the 41% retracement. Now we're at the 50. Now it's half. Not to say it's good here. This is equally bad, but it, you know, it is true that it is just half now. That's the reality of it. Every single thing we've done in today has amounted to us coming back to half of the biggest move. Interesting. It just means that all the people in the morning were not presented with a giant move that actually stuck. Because everything that everyone had to deal with, whether you were Warren Buffett or the best hedge fund in the world, was this chop, not a long-term move. And I know every single day the markets like provided a really attractive long-term move where those that fought through the chop in the morning undeniably were exposed to a great move on the other side of it. And we are at the time that produced the end of the consolidation typically. Like when we ended the consolidations, it was later in the day. I mean, from now till 1, it was the hot spot, I guess you could say. And what's funny is that's not too far off. Like that's one of the characteristics that's probably stuck for the longest, which is interesting because um, I would suspect it's just something that ploys on the difficulty. Like it just makes it more difficult. And I'm like, okay, well, how do we make that difficulty not a difficulty for us? Well, make the entire day easy to stay there, to be there, make it seem like it's just a small amount of time. Like what I used to do is spend days trading and all of my waking hours were spent in front of the computer with the with trade, just monitoring. And like even at the office, like I would sleep on a gym bag and basically wake up. I would literally keep one eye open almost all night like a dolphin, and just have it looking at the monitor. And the ranges were brutal back like 7 years ago, and the overnight ranges at least. And basically, you know, it made the day not particularly seem like it was too much. But not to say it's absolutely necessary, but it definitely helped in my ability to develop an understanding of the market and what it was supposed to do at those times, and it helps. The slowness ended with everyone getting stopped out, but remember, it's not like it doesn't have to come back to the high after it's done. And I'm like, yeah, it's tough. It's tough on them because they're like, anybody that bought in that consolidation is experiencing all the profit that they were just excited about being returned back to the point that it left the range. Now, that is an emotional roller coaster that I think is part of the game played against most of the people. Because you want to know what happens to them when they play that game? They lose energy. I think. I think they lose energy. A lot of people lose energy. They lose willpower to continue when things like this happen to them. If you understand that it's supposed to happen, you're not supposed to drag your stop into the red zone. You're not supposed to drag your stop above the range, preventing it from doubling and halving. Because it's true. What does a consolidation do? It likes to double when it's done, but then doesn't it half typically? Sure, not every time from the point that it doubles, but it loves to half, by the end result of it. If you look at the end result of every single fib channel that's ever been created, I mean, it's certainly notorious for halving or fib set. And basically that means we just take one portion, double it, and then half it. And it all comes down to just halving the move, which is weird. And when we half something, at any moment that you half anything, the 61 can be a consideration. And the 61 is slightly higher than where we are now. It's at another node that I think wants to be the POC. It's like coming out of nowhere. It's like, all right, we've got a big node down here, which is here, and we've got a big node up here. This level wants to have a go at stealing the POC, this red line. So the red line will shift only when we've put more volume there than we have here. Now, what's funny is when we do that, this blue line is likely to have a role. In the event that we get on top of that blue line, I find it incredibly likely to return back down to it in the event that we get above it. But it's a heavy demand to say that it has to get above it, but if it finds the energy to get above it, then I'm attracted in it. And it's a very particular thing. And only when it gets above can I make that trade. But you know how often it does get above those lines? It's unbelievable. And lately it's been doing it from the bottom. Like this is the middle, so it's not exactly the same as what it's been doing, but it's close. I mean, I guess the VWAP is right here, so that could kill volatility a little bit. Like every candle could come back to that white line for like maybe 5 minutes. Maybe we'll fit one in there that kind of goes sideways and doesn't come back to it, sure, but I'll say, if anybody drags a stop within its path of hitting that white line, you're asking to get stopped out, I guess. And Same thing kind of goes for the red line until we get off of it. The red line that's the POC. Because after all, how many times did we return back to it when we were in that last consolidation? Does it like returning back to it? And should we prevent it ever from returning back to it? Well, there's two lines that are like that, the white one and the red one. The red one is a POC. It is a level that we know it has the heaviest amount of volume. This level is an average of all of the volume that we had. So it's nice. Again, it's a small consolidation. I don't think it's going to be as long as the last one. I don't think so. I think by the end of it, it could look like it's part of the last one. This could be drive 2 of 3. Well, I say of 3. Let me think about that. Lately, we've been doing 4, so if we decide to make 3 drives in the middle, it's less effective than if we decide to make 3 drives at the high or low. From the POC, we could be interested in testing the VWAF. It all depends. This area is the exact pinnacle of the most. It's the most flat area that we were at in that last consolidation. Now it is official that everything that we did on the top of that consolidation has been a spike back to the consolidation. Technically, we have 3 drives across those, but it is the first time that we've done a predominant retest, and it is as low as we went last time that we were low in this consolidation. We've created small B points above here, like that level. It doesn't really mean much, does it? But if it wasn't hit, I want to know about it. Because, I mean, you would think, like, with it being so negligible and all that, um, that it would be easy to hit. But I look at it as prime data. You know, in the event that we start to forget about levels like that, I want to know. The 50% retracement ultimately was the high of this move. The 261 have a roll? No. It managed to give the people trouble at the 188-200 before getting back to the B point ultimately. Now what's funny is the first test 188 people were fine. The first test 188 people were not fine here. They were forced to try again in the middle. And is it not true that we have 3 highs and we have 3 lows now, like across this spectrum? An expanding wedge, you know? So we do have that right now, and it is expanding. This line very much works the same way as the one on the top. Unfortunately, it's already returned back to the blue line and does not provide an opportunity. Very close to the 61 though on the downside. Looks like it's pulled back to the 61 area. If you take a fib from the low to the high, we can see the 61 is exactly where it basically pulled back to right there. And we can see that in action right now with the blue line, of course. And I do question these moves up here. Like, can we readjust the major trend yet again for another break in the future? Because it is true that this trend is the downtrend until it breaks, and it's good to have an awareness of it, I think. It's going to become between that line and the blue and white one. The blue and white one, I think, is a very significant line. I think that its break could mark the end of the chop altogether and could produce a very nice hedge. Very nice profit for any hedges taken above it, that is. And I think that it will, like, let's take a look some of the other times that we've had this situation. Like when I was explaining this before, we looked at this falling wedge, right? Or rising wedge, and it busted out of the top and continued higher. You see how that blue and white line was untested like that? Well, let's look at how it actually got back to it, because it did this. Notice that unlike many blue lines, it blew out of the high of that rising wedge and then ended the day up there and went sideways for so long that when it broke the line, it came down. Now let me find another example. Exactly right here. This is a completely different environment from even longer ago, where in that environment we started with a rising wedge as well. Let me see. And carried on to the high, but when we broke, you can see that there was a rising wedge in here, all the way in here. That blue and white line was never tested. The red-yellow line still held the entire time, and when it finally broke, it went sideways to the blue and white line, and then broke through it and tanked through the ground. Okay? And basically, that's the same thing that it did when it reversed here. Went sideways in another example. People have to be aware of the overnight movements in order to be able to see that this is even the case. Many people will not be aware of it, yet it chooses to happen so frequently. It just shines a light on that many people do not have much impact. The 61 choosing to hold here, I can see that in the event that we get all of the B points, it would be a 61, which makes me think that this is kind of an important B point right here. Ironically, that B point, it does come from a 188-200 area, where if I apply these fibs on there, you can see that just like the other levels, the 188-200 was initially hit first, and then it was hit again, and now we're here off of that 188-200, having never stalled anywhere but the 188-200 in this case. Is it not true that in this environment we have a bullish pattern? It's sideways, up, and then the largest move is down. People see that, and they don't understand that the downwards move is part of a bullish pattern, ironically. And if it wasn't, then it would create an uptrend. And that's the irony of it, because this is its reverse, where the largest pattern is, or the largest part of the pattern is up. And in this case, the largest part of the pattern is down, and that effectively means that we can make this part the middle yet again. Everything that's from under here gets tested, just like everything from over here would get tested. And the targets. As a result of hitting these targets, it could very well be a smaller triangle. Like we do have a trend. This trend is a triangle line, make it purple, because I don't believe that it has any true significance in terms of trend break value. Like, we're still in an uptrend until we break this blue and white one. Which is ironic because I didn't make that trend today. The market came down and decided to respect it as the low. And now it's like if people didn't have it, they will. Because they can put a line there. And until it breaks, it is the trend. It is the uptrend. And of course the purple line is standing in the way of it ever being able to respond again. But this is clockwork here. We've just met a gap as well. Getting through the gap could be swift and quick, however, staying through the gap, actually the node is there. We do like the node, right? So the node is 61 territory as well, remember? The 61% retracement somehow is the node. It's like, yeah, I've seen that before. This would be considered the ignition candle, where basically the first barrier has been met, and in a M sequence that meets something like a barrier like we have, it could be interested in making a W to compensate for the M, and that's absolutely fine. Just like we had a W to start, and this M is just as well very much compensating for that W. And when does that end? Well, is it not true that we came from a 188 at the bottom that was 2 and M? And at what point has it not been in the sequence of making one? You know, it's just getting better at it. And lately on the short term, one of the most favorite moves on like the 15-second is to create an M and a W, and then to hit the B point at the high, and then to hit the B point at the low, and then to consider itself in a triangle. But this B point gets hit first, this B point gets hit second, ends up in the middle. And this is why I don't take the previous trends off. I don't like to readjust them all together. I do acknowledge them as separate trends that could have separate retests. And like we saw in the short term here, it wasn't exactly perfect, but I believe that the yellow line first got an attempted retest with this big red candle, and then the second line that broke had an attempted retest like that. Not always do they have to be so good. At this point, we can see that this line is getting another retest. A node that ironically we didn't spend too much time in originally, but that's the node that it was. It was the 141 node. Like, in a strange way, what we had to begin the day was very similar to what we had here. In many regards. As I mentioned with other moves in the past, there can be the same components, like everything that we can see in this sequence is part of a step. Like we start by going sideways, that's 1. We go up, that's 2. Then the big down, that's 3. And then 4. Back to the sideways movement. Same thing happens here. Sideways movement, and then we go up, and then we go big down, and then we come back up to roughly where we did that sideways movement. Same kind of idea, same kind of component, same sequence from the sideways to the small up to the big down to the back up. Everything same. With its own flair. Like this doesn't really have the same kind of 141 struggle that they had before. Ironically, when we came up, it's like it struggled at that spot though still differently. You know, very strange to see that. But is it not true that in the same sequence, this is a spot that had struggle and it didn't on the way down? And it's funny that on the way up, it didn't struggle. It's just a little backwards here, but it's doing the same thing. It's fulfilling the same sequence. That at this point, at the 141, it had a struggle. This time it was on the way up instead of on the way down. The last and final B point in that sequence hit. And I mean, you want to know what that is? This is the equivalent of this getting to here. The equivalent of this getting to here. And it's funny because how close is it to that? You know, it's so close to, you know, this is how today we do an S wave. And anything that we do from this point beyond is not part of a sequence that we've done today. It has done a large version and it's done a small version, and at this point everything's returned basically back to the point of origin for this pattern. What's funny that is that this point right here is neglected. You know, we I guess made it to the very low of it. That's the biggest node, really. The, the volume, I think there's more volume in here than there is in here. It's just this is concentrated to seem like a very, 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 you know, specific point. But if you took all that volume and like pinched it down and squished it out, oh yeah, if it's all there's more volume between those two barriers than there is in this one for sure. So I'm definitely convinced that that is a area of significance. Also, that's where the 61 is of the entire dump. So I'm curious about that right there. hmm And that's basically where it all began. This movement. So very curious about that. And at this point, the trend is so steep for the one that we used to get up here. I mean, in the event that the yellow line breaks, or sorry, the red yellow line breaks first, the steepness of this trend could affect the longevity, and this line could actually be used to break and for the retest. Because I'm under the impression that okay, we've done one test here already. Yeah, I don't see a situation where if we get on top of that level, it's very likely that we come back to it. So it means that if you're exposed, to the 61 and such, dragging your stop in this area is kind of crazy, in my opinion. So if you did catch the low and keep it, that is, it's made a very, very strong retracement like we saw last week to the point that it broke that trend. Anybody that was caught trying to buy down below or is safer than the people that were trying to chase the trend. Anybody that was in after that trend broke had a retracement all the way back to the point that they broke the trend. Now, do you want to know what's funny? Is if you look up here, this trend right here, it broke right here, roughly. All of the exciting part has been returned. Just like a smaller version of this. How does it fit so many things, bigger and smaller version into one area? I don't know. But it's impressive. Because I don't decide that it forms them. What I can see are the facts. Like at the bottom of this range, we do have a spike and a wick out of the bottom. I think that this spike and wick can be used as an appropriate size spike and wick. Like if I'm looking back over here, the amount that we spiked when we spiked before, why is it the case that it all fits inside of this? I'm like suspiciously particular. And we continue to use that even after that trend broke, you know? So I like that. It's true that that's the distance that we made it above the view app, and it may not look as wiki up there as it would be in these other environments, but was it not sold off as quickly as it was bought up past that point? That's an understatement, really, if you think about it. But at the end of the day, when we were down here, it was referred to as a bullish pattern, right? So we can see that the biggest component of this move is still a downwards push, right? And it started by going sideways, up, then down. And it brought us past the point of origin. So anybody associated with that is more than profitable. Now, of course, this is a level that it was notorious for going sideways at for a prolonged period of time. Oh, geez, yeah, you know what just came to mind is the head and shoulders to inverse head and shoulders. We saw this earlier. Like, I just want to state the facts here that, at the high, we have three extremes, 1, 2, and 3. The middle one's the largest. At the low, we have three extremes, 1, 2, and 3. The middle one is also the largest. So on the high, we have a pattern that's designed to reverse the market down. On the low, we have a pattern that's designed to reverse the market up. What we always get when we do this, whether we like it or not, we can connect these highs. I'll use a trend line even, and these lows. And that gives us a triangle every time. Sometimes it might look a little funny, but you can always connect this high and this low if it is doing this. Because if it doesn't have that high and that low, it's not this. It won't have three highs or three lows or whatnot. It has to have three highs in order for it to be a bearish uh, head and shoulders, and it has to have three lows in order for it to be a bullish inverse head and shoulders. And the idea is this pattern's supposed to look like this, and it's supposed to go down, right? And then on the flip side, there's a pattern that's supposed to look like this, which is exactly inverted, and it's supposed to go up. These two patterns are exactly the same except they're flipped upside down. Okay? And when it does this, you could see how it could confuse people because it's trying to be the three highs that it has here in the bearish pattern. And also it has the three lows, which could be considered in the bullish pattern. which is kind of remarkable considering that it fits all of the patterns into one. Hence why I call it an all-in-one. Head and shoulders. And there can be all-in-one other patterns as well, like M's and W's, for instance. M turns to W. Under no circumstances would anybody read this as an M, right? Like that's a W, the green one. But under no circumstances would anybody read that as a W. It is an M. Both of which part of the same pattern. You know, if you're forced to look at it enough, you'll see it. I've watched every single time it's done this in the past a long time now, so definitely intriguing when it makes it. Because what it does for the people that think it's going to do the original pattern is quite terrible, really, if you think about it. Because the head and shoulders is notorious for forming at the high like this and then coming down. Simple as that, right? The inverse is inverted. I'll draw it in anyways just to give a visual example. Is inverted. It comes up. 3 highs, the middle one's the biggest. 3 lows, the middle one's the biggest. Doesn't matter if it's a little funny looking sometimes. Sometimes they can get pretty close. Still has 3 lows with the middle one is the biggest. That's the component structure. And in here, you know, you can see that really the highs aren't even none of them are the same level. All of them are kind of weird. But they're still doing this. It's still true that I can prove to you that the middle one is the biggest on both sides of the spectrum. And until it's done, God forbid we try to impose something on it or try and trade something that's gonna prevent us or prevent this from happening, it's best to let it finish because the best thing about it, ironically, is when it ends. Because everything that it does while it is doing this returns back to this red line. You know, it's not an effective area to position for a move that's very, very strong and far away, right? Because everything that it's ever done in here has just amounted to coming back to the heaviest traded spot. So the people that have been here for the longest have spent, you know, most of their time inside of that range. Where do you think most of the people have traded from? You know, like it's more than likely a lot of people landed in that middle area. Like especially like a lot of the people that, you know, just buy mutual funds and stuff like that. You know, like they're going to be, or people that just tell the bank to do it. They're likely going to end up in this area in the middle and provide liquidity in the node. I see that at the beginning of this, we have a node on the top here. This is where it all started. You know, that's where the majority of the volume found its support and resistance first. And it doesn't even look like it was very good of a range, does it? It was very sporadic around the exterior of that range. But the bulk of the volume, like we could see in here, was placed around a center point, and everything that was outside of that center point was very much like wicks and spikes. Now, of course, the best times to trade were not within that area, but outside of it, like we can see in this same case. But it didn't spend much of its time out there. You could see that maybe 25% of the overall time was spent outside of the range. Majority of it spent inside, and as a result, we're left with this giant barrier now, where it's true that we broke the trend and ran into that barrier. Like, I'm not making it up, it's true. That barrier it marks the high of where we just went. Basically, now we have another one, and I can see that when we made this first consolidation, it sits on top of this medium level. And now when we have this consolidation, it kind of like the majority of our current consolidation sits below it. And it's the second one. And like before, this one's higher and it's first. It marks the first node and the first area of consolidation. Our current area is below it. It struggles to make it through it, and that's what we had here. Ironically, I think the next time we approach the red yellow line, I'll have an easier time at breaking it. Did you know that every single time we do test it, it's going to be lower? As time goes on, it's impossible to ever test the red yellow line at that level again from the underside. It has to be from, and even from the overside, it'll be a completely different line. But we are left with a B point down below. The M and its need to create W's could continue. Like after we were presented with this M, we did get what ironically was like a 5-wave move, but playing that down, can you not see that there's a W into an M in there? It doesn't look pretty, but it's true that the same components required to make any other W exist in there, and the same components required to make any other M exist in here. And there's absolutely nothing wrong with either one of those patterns. And they both played out to their B points, as this one's playing out to its B point. Not particularly huge moves or nothing, but they're moves that have marked the tip of this triangle. Like I mentioned before, when we do an M into a W and it's interested in hitting both of them like that, it's like asking for a triangle lately. This will change in the future. So like the market wants you to get used to something and make it part of your strategy so it can change it on you. Makes you lose control in my opinion. But to have an open mind and to understand that patterns change, triangles change, the way that we use trends change, the way that we use nodes change, the way that we do everything is subject to changing. And to understand every change that it has made in the past and relate that to the current environment is the key. Like to understand why did we change before when we were doing this? And is there any sign of that? It's like it wants us to know. It wants us to remember. And having the ranges on there from other levels is a really easy memory jog to understand, okay, this is what it was like when we were at these levels in the past and what we could expect in the future. And many times it's surprising how, when we were below the all-time high, how many times we actually came back into connection with other ranges that we used in the past and used them really, really well. The red yellow line still remains the interesting level. It doesn't necessarily have to break with incredible impact, but I do believe that it is going to get some attention and it is likely to break in general. It doesn't have to be well though, because first things first, it is a triangle. The triangle is going to have to end before anything else begins, right? So no use getting your hopes too high until we end the triangle. Now the beautiful thing about the triangle is every triangle comes with a time. because at that time it's impossible for it to be within this triangle. Sure, it could make like a little bit of a high and say, oh yeah, you know what, we're going to readjust it to there and it's got a little bit more time. It does that sometimes, but majority of the time it actually doesn't. Majority of the time it actually makes a giant S wave. Majority of the time it's an excuse for it to make a giant gyration back to the point that it left the triangle. Like, is it not true that in the beginning of the day we had a triangle over here and it left it really well? I mean, it didn't double it like it did the ones before, but it did a really good job at doubling the bulk of the movement inside of that triangle. And it doubled it down, you know? And basically, it is very suspicious that we are, doing that again there as well. Could it result in the same kind of movement? Because you could say that when we were in this environment before, it was easily a consolidation that matches the kind of movement that we're doing in here. And for us to be condensed and contained for that amount of time amounted for us to be able to move this much when we were done. And could it be that we're interested in producing that amount of movement when we're finished this amount of consolidation? It's kind of intriguing to think about because it also brings up a time, like how much time did it take to do this? And could it be the exact same amount of time to do this? Well, I'll tell you one thing, no matter what, the triangle is going to end by the time that it meets the tip. And why is that important? Well, because the triangle has three angles, two of which the market can respond to. This one and this one. They're both trend lines. One of them is a major downtrend, one of them's an uptrend. And one of them's going to have to break by the tip. It's a mathematical fact, unless time freezes or the market halts or something, which is less than like 1% chance. We're likely going to see one of those trend lines break. And we will be provided with the data on exactly how that trend breaks and exactly how this triangle responds, exactly how it treats that POC, exactly how it treats the VWAP, exactly how it retests the triangle, exactly how it meets the edge of the node, because it's in a node right now. It's got this node right here, or the edge of the node right here, and the edge of the node right there. And you can see its comfort zone is contained within the node. Everything that it's done since it's been here has been in the node, and for what it hasn't done, it's suspiciously particular on either side. You know, and that's not so uncommon. Like, is it not true that we did that when we were in this environment here? We took the spike and put it out of the bottom. It was trying, you know, and it was trying to be even. And on a smaller scale, it definitely was even. It definitely tried it and succeeded. The more I look, the more I see that other consolidations also have moves very similar to the ones that they began with on the other side of the consolidations. Or maybe I'm making it up. But I look at these as information that is true, that it literally used before, and that, oh my goodness, I'll be damned if I didn't recognize it doing something so regularly, so often, so clearly, you know, and to just neglect it. I couldn't. So I mean, it involves digging for it sometimes and just laying out the facts. Like, is it true that we treat the consolidations the same way overall? They might not be constructed in the same way, but do they both have wicks and spikes out of the tops and bottoms? And are they even? And is the movement this like? There's so many different ways that we can do that. Like the way that I explained right there is one way, but another way that we've seen that's a lot more common is for it to actually move like this and to have a large quick move on one side and that same large quick move on the other. Which you might be thinking, what's the difference really? Well, the it is more common for it to do that, you know. And is this so different? No, 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 no. We can't. That would be like super. I'm like, how do I refer to that? Like, I'm like, it's. You have to be open-minded, I guess I could say. In that case, open to the idea that the square is a consolidation as well as the triangle. Okay, like you can confine an area easily between an area that's not triangular whatsoever, and it's great at going up and down throughout the barriers. Like for instance, when it was doing this red zone, green zone down here. It could go back and forth for an eternity, technically. But yeah, the triangle does come to an end soon. And when you would think that really there's not much time left in there is 28 minutes until the tip, but I don't think it's gonna necessarily get all the way to the tip. We should be prepared for it next time when it hits the extreme of the triangle to try and leave. And I'm like, well, it's harder for it to honestly stay in between them than it is to just leave this at this point, in my opinion. It gets harder and harder for it to respect the ranges as the moves have to become smaller and smaller as time goes on in order to stay in it. Which we can see that after prolonged condensed environments, we've created volatility that's relatively large on both sides. Could that be something we could expect on this from that? Like, I'll tell you one thing. We've been great at doing M's and W's, right? What on earth is going on here? Because I'm like, well, the tip of the triangle has a profound impact, but it's certainly affecting its ability to make an effective triangle right now, or effective W right now. It's what I would call a dead zone, the calm before the storm, because we know by that time it will have to show us what a trend break looks like again. And tell me how, in any one of the environments that was once dead, did it not break a trend to leave it? We could have looked at that like a triangle, but I'm like, it's it was dead flat, right? And this one's a little bit better at being a triangle. It's actually, you can count on the fact that more people will see it, as something that's actually worth analyzing, like that in there. People would just overlook it typically, and I think that you can find a lot of similarities to the smaller patterns and the bigger ones. So I look at everything if, you know, I find it important, all of it. So, um, doesn't mean you have to be part of that, but to understand it is key because it can lead into the next understanding. Because I look at it like the people that have control have to maintain their control via implementing their understanding on the market at all times, or else somebody else is going to take the reins. Think about it. Do you want somebody else moving your assets, or are you going to move them? They they have been presented with this by the market, and it's true that if they don't pick the patterns, or if they don't have the money to move the market, somebody else will. And God forbid they leave it up to the public. I don't think that they do that very often anymore. That's why we see such precision in, day out, all the time, constantly on an agenda, to either get the people out of the way or to make the people provide them liquidity. Because it's true that whether the people like it or not, all of this upwards movement, everything that we've seen up here, right? All of this upwards movement that's up there, right? We can see that the people are just forced to trade in this area up here. So anybody that's ever sold anything up here could have been selling and providing liquidity to the people that orchestrated this move. And I'm like, how not if not? When everyone sits up here providing these giant nodes, trading in them, not really making too much, what are they doing on the other side of their trades? They're providing liquidity. And however much volume there has been today, people have basically been given a range that basically everything amounts to going back to the middle. And until that ends, everything has been back to the middle. Let's take a look at some of the other indexes here. We'll go ahead and look at the Dow. Just quick check on the Nasdaq. So that's what that looks like. And this is what the Dow looks like. You can see it's a little bit different, but it's kind of the same now. And let's just do a quick check on the SPY, the slow SPY. We can see that's really slow, very very unforgiving. It's like if you're not trading the barcode back to the exact target, it's really unforgiving to get out on short-term trades and so on like that, because it's like you better be playing to the bigger target and it better get all the way to the target. And I'm like, you can see this is the original target level for this major pattern. Now you want to know what's funny? Is that it reversed relatively well. Like it wasn't a 188 200, it was kind of a 241, but the bulk of the volume was pretty much at that 188. Bulk of the volume was at that 188. Never to have really hit the B point since it's hit all of these levels, since it's created all of that volume. Intriguing. And their range is, you know, more of a vast triangle, I think. Like it's a bigger one that it encompasses more data. Where it too is getting ready to leave. But where, the SPY will have M's and W's, they will just have chop. This is probably the worst chop that you can get involved with on the NASDAQ down here when it makes a dead zone at the tip of a triangle. We can see that we are, in fact, breaking the bottom line of that triangle. The first break doesn't have to be the last break, just remember that. So, the way I see it is, even with that trend break, those that found value in it, are they really outside of the node much? Not really. I think it's still very much people of the node. And this node right here has grown. And I mean, it's grown to be roughly the size as the one that we had above. Like this node above here. Not sure why it was moved down like that, but essentially that's the kind of environment that we have here. Two giant nodes between each other. Everything that we've ever done outside of either one of the nodes has returned back to it as swiftly as it's left it. So this is almost like it could be the green zone to the red zone up there. Because think about it, isn't that true that the spike that we made out of the bottom is suspiciously particular to the spike that we started with at the beginning? And like I said, the first spike doesn't have to be the last, right? So we're just getting familiar with what it's like to leave the triangle. And that was a really terrible trend break, right? But it happened off of like a dump that kind of led people on to the break of that trend. These are played out. I'll take them off. A little bit of a bigger move perhaps. The POC could be inbound. We have to watch out for that level being an important one. In the future, well, I mean, it's one level that we have hit many times. I would prevent it from hitting. Of course, it's not a very big move, so it shouldn't really be too significant, but it is a move surrounding the middle, and it's one that could end this ridiculous relationship with this node right here. Like, nobody, I don't think, is really wanting it to stay in there, right? Like, that's it's a level that we're interested in what could make us leave it. Because pretty much anything that we've done since we've been in this area has been less than what it's provided elsewhere. Like other consolidations were bigger, other exits were bigger, you know what I mean? It was just always better. So this is a very attractive exit as we've started to break down the barriers of what has made us so slow, and Obviously, there is one major VWAP, and it's at the high there. Well, it's above us. And that's the white line. Breaking down that level and trying to step on top of it could be on the agenda, with this being an area that could increase volatility. We have still till the tip of the triangle before it can't test it anymore, but we can see everything that it's been interested in doing since it's left the barriers of that triangle have been to come back and test it, to acknowledge it from the other side. Now, without that needing to happen anymore, volatility can increase, the VWAP can draw us in. I can see we've already hit it a couple times. It's interested in it. So after all, I don't even think it is the middle. It's below the middle. Yeah. The middle was where we went to last time. The middle's being softened up a bit. This range up here, the red zone in other words, might want to get attacked at some point, which is okay. Testing the red line from above could be a short-term aspiration, which is a POC, obviously the heaviest volume node. I'm not a huge fan of the range still. Of course, even at its best, it would be 60 points. But for what we've made movement on the top of this VWAP, like think about the VWAP for instance. We started off by making this giant spike, right? And like, how much did we move down off the VWAP? Did we make a giant spike? You know? This giant spike off that VWAP was at the bottom. What happened after our first giant spike? Well, a consolidation. It was very triangular, like this one. So it's true that after the spike formed, then the consolidation did. And on both sides of this VWAP, we have a spike and a consolidation. These two levels exist on the high. And these two levels exist on the low. We're left with that. Around this VWAP in the middle wants us to see that it's equal. If I take all this off, you see what we're left with is that white line. And how incredible is it that it's managed to spend that much distance and then that much time with that much distance as well, straying away at that level. Because you can place a VWAP anywhere. You can get a VWAP that's default and it places it for you. I don't recommend it, but that's what many people do. And at the end of the day, I think, understanding where the VWAP comes from and why it's placed there is really important. And this is a VWAP that insinuates that you had to be there when it was at the end of the day, 2 o'clock on Friday. After all that chop and then after all that blast, you had to be there after all that consolidation to understand that there even is a VWAP there. And it's respecting that VWAP above all, which is interesting. Or it wouldn't make everything, the whole day, as a matter of fact, even around it. And what's funny is just because we did this, and then we did this and this around one point, this is one way for us to do that. So simple. One way for us to do that. And it almost changes every day how we do that. Almost changes every day how we do that. This is a very attractive pattern though. Like if I find it on a clear chart, my point is oh, this volume is weird. But my point is the VWAP goes through like this. This is the one with the dodgy volume. But when we see it has a spike on one side and then the consolidation, we were presented with a spike and then a consolidation. Both sides had the same components to an area that was otherwise identified as exactly the middle. And like it's mathematically true that this was the middle of it. Like if I take all my drawings off, you know, this is 50. 50% from 0 to 100. If this is the whole thing, this is 50. And is that not where we went? To make everything half. To make everything this. I find it intriguing that the angle that we just used on the top here between those two levels was an angle that we used on the low long ago. Almost like those two levels and these two levels are kind of similar in distance and time and size and angle and everything. Started here. Kind of intriguing. And if it's going to make it that particular for that amount of time, that amount of distance, that amount of angle, and if it's ever going to do that again at a specific time, what do those two times have in common? Is it not true that this one here sits at the bottom of the range at the extreme where nothing but wicks and spikes pass? And this one sits at the extreme where it's true that the angle may be a bit different, but it sits on the other side of the range where nothing but wicks and spikes pass. Just so happens to be the case that those wicks and spikes are roughly the same size as the wicks and spikes that we had past here. So does this become the other side of the range? I'm curious if they would make that used on the bottom over here, perhaps. But at the end of the day, we haven't really seen that yet. .61% retracement of this entire move as well. Very close by. Basically everything's been wicks and spikes past it since we've been past it. We just hit a 78 at the very low, almost. It's managed to fall without much of a blue line, but if I was to put one in, it would be this one. Eagerness to return back to it could be seen as attractive, but also in the event that we pass a line like that, the yellow lines from above could be attacked pretty heavily. like that one in particular. Many people won't think that a short-term analysis will end a long-term channel and start a long-term trend. A lot of what they think is I believe that there's so many specialists out there that you can count on the human beings that trade in the short term to not be able to hold long term. And a lot of the people in the long term don't consider short term reversals. So it's perfect for the people that consider everything. And I'm in the business of considering everything. If the market's willing to present it, then I find it important. And that's what I believe I'm up against, It's like if I'm not considering it, then my enemies are going to consider it. That's no good. Or opponents, should I say. Well, we get a sneak peek of exactly what it could be like to work with our next blue line. Exactly what it could mean for the next yellow line, exactly what it could mean for the next sideways up then down. The biggest move down, having the strongest implication. But those that experienced a move from here to here did perfect. But if you increase this move so that they can see what a $3,000 profit target looks like and then take that back, can they handle it? But it's the same retracement. You just showed you could do the same retracement, And it's like it does a big one. People can't handle it. You could see how though, right? It's very interesting to me. Because keeping your stop at the low and hedging against it, you're not focused on, hey, oh my god, it's getting so close to where I entered at the bottom. You can look at how much progress your hedge is making. Because every moment that it doesn't make a new extreme, it means a profit for your hedge. At the end of the day, if, like I said at the beginning of the day, the number one spectrum or number one position that you can have is to be in from any day prior to today and to be hedging against it. You can see that today, like I said at the beginning, was difficult for those trying to go long. If you already have a long, then you don't have to worry about catching one. And how easy has it been for anybody that's held a short? They're just waiting, right? Because I think that we're waiting for the hedge to get knocked out. Once everybody's done shorting it, once everybody's done, trying to sell off, then it will be clear skies again. And yeah, sure, it will be after a long, prolonged battle for those that are part of the short-term range, but I can see that those that had the integrity to keep the low of day when it was made clear um, at the 188, because it was a very clear 188. However, we knew that it was going to come all the way back to it, and it did. But if you withstood that pullback and maintained to the B point, you could take off enough there to be able to withstand this entire consolidation. So you don't have to buy another spot because anywhere that anybody buys is not as good as where you've bought. And you could say that about positions any day prior to today, except they're even safer than this low. So it's an interesting one. I can see that the people that are positioned best on Wall Street are not buying their assets today. I'll tell you that right now. But they own them and they're deciding to keep them for more highs. 20,000 is not too far away, and it might be in time, but not in distance. Like we just went from 16 to 17 really quickly, and it was on a move that you could see had much authority, and they were very very. It wasn't like a hey everybody in the public, we're in such a bullish environment, everybody jump on the bandwagon. It's not like that. They didn't want people in. They made it hard. They released bad news on the day that it all started. It's convenient for them. But why is it all I don't make it up. It's factual information. The day that it all started, it was a cliffhanger dump day. Huge, 8:30 in the morning. People wake up to seeing huge red if they held. And it went vertical. Let's look at it real quick. this was the report right here, 8:30. And it did that, right? So everybody in the morning got to wake up seeing this. And then when it opened, it continued, so they got to feel it, they got to experience it, they got to be part of it. And that gave all of the news articles time to say, hey, everybody, market's down 200 points, over 2%, all that crap. And everybody had time to reposition themselves. Anybody that tried to find value in buying the dip, they better have bought the wicks and spikes at the low because it came all the way back. And I'm making a video right now on exactly how, when it was here, I said anybody that drags their stops above that level is subject to getting pulled back. And then when it was here, I was talking about how, hey, I was missing one part about this pattern that I said it was going to do, because that's what I said it would do. And then it was this. So I was like, hey, if you drag your stops anywhere above that level, which is the first high of the three, you're subject to getting smoked out. And we knew that on these three highs here too. 1, 2, and 3. And then it continued to do that all the way up. It'll be in the video. I'm gonna make long versions and short versions. There's a lot of stuff I want to go over in those days. And then the days to come, like literally leading up to those days, the expectations that I had for this movement was very interesting. We can see now we've stepped on top of the blue line. And the yellow line has been of interest since the blue line hasn't been holding us back. So we've been pretty interested in spiking and wicking back to that 61 yet again for basically coming back on the people that valued the 61 the first time. We came back on them and then back on them and then finally took everything back on them, and they must really still want it if they're going to be in from that 61, right? It's tough. Took nearly as much time in chop as it did just to get back to here. So all of the time that they were spending waiting for that profit that they had beyond that point, they had to wait in consolidation. Why does the market choose this? I don't think there's a person alive that would want it to do that. But you can expect that people will be squirming, right? At the end of the day, how many times have we broken a trend from the high? Like, it started from here, broke, all the way there, came to this point, broke all of that, but it didn't matter because they took everything back to the point the trend broke. Like, you notice the trend broke here, and it's back. Hopefully you're in from the wicks and spikes below, it's saying, right? Because that's all that there was below. And look at the volume. Oh wow, this volume's skewed, but still, you can tell the volume's minimal at these extremes. These weren't as much of a steal as they usually would be though. Like with it being a 188, 200, and also coming back on them, putting a lot of time there, you know, we can see that they were attacked again. It's rough. Just like the people of this node up here that caught this trend break, what happened to them? Market didn't stop until it was sure that as long as you're not chasing the excitement, it doesn't want you to be a holder for a long period of time. If you're chasing the excitement, come back for you. Chasing the excitement, come back for you. Chasing the excitement, came back for you. In this range, chasing the excitement is the worst thing that you can do. In retrospect, right? Of course, this is going to lead. This is going to end this. It will end this consolidation, and that might not be the case for the environment in the future. Not to say that chasing is ever a good idea. It's like what happened before the reversal. You know, it's like why was there no value found on the underside of the trend break? And it's like, can we wait for the next time that we are underneath a trend break to be part of it? Like fresh in a consolidation, not ready to leave the consolidation. You know, and from the times that it isn't spending 80% of its area, from the times that are like this or this, but this area is the chaos zone where the node grows and the people suffer that are inside of it, where they never have a trade that is one that you could say is worth showing anybody about. They all get stuck inside of the node, right? good for profit taking, great for trading back to it, not good for trading from. And I mean, like, if you think that a lot of the public were responsible for trading back to it, well, it would show that they would be in from these areas, where it just simply doesn't. It shows that they value to trade in here, which I'm sure the institutions just love because it provides amazing liquidity. And then they get them to clump again in another zone similar to the last. Basically, making things really choppy in the middle, making things very even on the outsides. Very similar in many regards, even to this. Sure, there's not many spikes and wicks out of the top. There was there. It's an idea how, you know what that is it's a conceptual understanding of exactly how wicks and spikes are associated with the channel. You know, like the concept is there are two components, the raw consolidation in the middle and the wicks and spikes that move back to the consolidation as quickly as they left it, typically making it even on both sides of the area that was really choppy and unforgiving for most of the people associated with it. And I mean, like, how many times have we seen that? Sometimes it's a little bit more on one side than the other, but it's not good for anybody that was in here, right? And you know, most of the people are in from there, and most of the people are in from here, and they just treat them like that, making it uncomfortable for all of them. And when they look back in retrospect, it'll be like, well, that was rough. So this trend break, it's data right now. What is it breaking like? And where is it? It's at the 61. The 61 notoriously broke a trend like this before. Where'd that come from? What are we doing now? Why is it so terrible? Literally, it's true. And at the end of the day, the one kind of Wiccan spike that really marks the extremes are these ones. And I think that they've happened outside of two of the most important levels. That one and that one. Now, this one's a little bit tough to get to and so on, but if we ever do, it's actually something it's like a precision line. Like, the only times we've ever been associated with that has been, um, controversial reversal points that have actually amounted us to getting to the other side of the range. The last time, it offered more than it ever has, but it was literally tougher than it ever has been. Like, it was no this or this. I mean, what you see how easy that was there and here, and then what they put everyone through that wanted that ease. They were like, "You're gonna fight for this," and it's not like it really stayed up for long either. I mean, sure, if you got your stop at the extreme, it's still there, but is it as safe as yet as Fridays? I wouldn't say so, but it certainly put people to the test for holding from there. Hasn't overlapped them yet, and I mean, is it as good as being in from this wick and spike down below? To have it come back and chop on top of you like that's not very nice, but that's what it took. And then they did it again to them. But I'm like, if you can handle this, you should handle this, no problem. But it's crazy. Uh, it's actually there's a lot more that goes into it when it takes a lot more time. It means that there's a lot more profit involved, and if it has to retrace that profit before continuing, um, in order to maintain the best, safest spot, it's true that this amount of retracement was necessary. And if this is how much it chooses to retrace, it will be the case that there will never have been a better place to have traded it today than there. And now, of course, just because they've made it the fact that they've come 94% of the way back before making the trend to value, like they earned the ability to double this entire range for going through that 94% retracement, which is kind of interesting. And everything that it did double, it took back, did it not? So I mean, what's out of order there, really? Is it not just doing this? Isn't this just one way for it to do it? And you can see how, like, it's like a shady way of going W into M. But until it was done, God forbid we prevented it from going from W into M. You know, now it's just terrible at that. I'm like, what happened here? I was talking about that a minute ago, and I'm like, well, you know what? This is remarkably similar to what we had at the beginning of the day, and it's remarkably terrible at completing it now. Because we did this successfully, you know, everything in there. We did we did the M that started from the same point as the B point, and then we came into a W that played out to that B point. Those are the components that worked before. And if it was to work, it would have worked like that. I mean, it ain't working for these people that are trying this range because they saw it work well for people that were playing bigger patterns that worked out better. It's tough. Now it's smaller patterns with smaller targets, and those smaller targets aren't even getting hit. Not that there's any B points or any green dash lines or any targets that I put in there, but they're basically you know, I noticed that the same sequence tried to complete. It got all the way down to what you could call the last move and failed. That's not very nice, is it? But I'll be damned if we get to that point again and I don't remember. Right? You know, of course we're going to remember. And we don't have to experience it being a negative thing for us in order for us to see that the thing that worked really well a minute ago totally isn't working anymore. And what does that mean? Are we around the corner from change? Well, undeniably, this is a change that we can take note of. And maybe, you know, we can see, well, what is a result of this change? It's created 3 consecutive lows. Could it be interested in the first of the 3 again? And if it's not, would that not be interesting for a crappy small pattern like that to not actually play out? If it didn't, that would be another one for the books and write it down and, you know, and jot it down and say, hey, well, remember that because you didn't get back to the B point, you didn't get back to the target, didn't get back to where the specific 3 drives pattern has been leading back to every single day for how long, and it decides to change on this little thing. It must be a big one. Must be a big change. Otherwise, I'm like, well, first off, it doesn't mean we have to take part in it, but we have to understand that this is a pattern that's probably worked over 70 times over the course of the past 5 sessions, and it's always led back to this point. It does not mean that it will in the future, but in the event that it's to end on something so small or insignificant, you could say like this, I'll be the first to know. And we can expect it to affect larger patterns too, because there's no way that the entities that created these environments aren't aware of every long-term and short-term level. You know, there's so much time in the day to be aware of them also. Right now, I think the majority of the reversals are coming down to small short-term levels because we're contained within the large long-term reversal levels that we've already used. So everything is going to be shorter term within them. And right now, sure, we are advancing towards this first high. I want to know exactly if it hits it. If it misses it by a fraction, I want to know. And I'm like, why? About this environment has caused things to change so much that this crappy little pattern can't play out? So we shall see. On the flip side, what if the crappy little pattern plays out so well that it breaks every trend and goes to the moon? Jot that down. We know about that now. You know, and it's like we'll know what this has to do because how many times have we seen this pattern today? Um, I don't think that there's a third consecutive low that we've made today that hasn't returned back to the first. You know, like this is, and ironically, this is a really good example right here. 1, 2, and 3, and it came back, cleared out that first of the 3. That's how it's supposed to work, 100%. Like these people here, 1, 2, and 3, and it cleared them out. But look, put you to a test before continuing though, because you would have had to take off enough profit at that first of the 3. If it comes down and slaps you on the wrist, you've already been paid at the target. If you demanded more than the first of the three, then you're trading some other pattern. That's the irony. And it could have been this B point that was untested. Anybody that held anything to continue on for the untested B point would undeniably be exposed to it. The same kind of move happened here to get these B points. And in this case, it's remarkable that it decides to not get back to the first of the three, but do you see what it did decide to get back to? Will it be the case that every single 3 drives down that we get has a 61 preventing it from getting back to the first of the 3? Because when I see what turned us around when we hit that level right there, that level is actually this 61 right here. The yellow line, the gold line as I call it, right? What did it get to? Right there. A level that's proven itself, to say the least, as an obstruction, but not in the way that we've just used it. Is it not true that this most recent test is different than any other test than we've made before? In the sense that, one, it's managed to get farther away than it's ever managed before. Two, it's also managed to end at it from the underside. When has it ever done that before? Why does it find the need to be so different now? It's interesting. Should we look for more change or disregard it? You know, it's like I work like that's how my brain works. I'm like, oh, we're definitely looking for more change. 100%. You know, I don't care how small of a short-term range this is. It's playing a low with a lower low and a higher low right now. It has a low, lower low, and a higher low, with the middle one being the extreme. Remember from before when we did this? High, high, high. Middle one was extreme. Low, low, low. Middle one was extreme. Where's the other side to this pattern if we're doing this? Is another question I have. Because how many times lately have we found that inverse head and shoulders have stood alone? You know? Interesting environment. For it to fail as well would create another 3 drives pattern. Obviously, it shouldn't be make or break for anyone associated with this area. I think it's very small, short-term range that provides an incredible amount of data on exactly how the market feels about these characteristics as we get to see them play out. Everything has come back to the bottom of that blue line. Everything has come back to the bottom of this falling wedge, you could say. Falling wedge, eh? It's true. The bulk of the volume is presented by this original blue line. The blue line, which has been the wicks and spikes baseline for anything out of the low of this consolidation. And nothing's managed to get past the 61, where everything used to. You know, everything was so bad at getting under the 61 that anything that did get under the 61 broke the trend. Did you know that that ended here? Differences, changes happened here. The fact that we didn't see that first of the 3 is very interesting to me. We went 1, 2, and 3 and came all the way back to here. Which, I mean, it might be a small difference, but it can never take back the fact that it did that. Never take it back. It's done it now, it's done it. Screwed. It's always done that. You know, when it does a move, can't take it back. And it's a stain on its reputation, as the way I see it. I will remember. So it's like, it's very interesting to see. You can be skeptical about the environment, monitor this environment, and see the changes as they come. Understand that the name of the game today is for the big players to be hedged while they wait for their assets to continue. If the hedge wants to be a multi-day hedge, that's absolutely fine. I actually don't think it's going to be, though, funny enough. It could be, but I'm like, I expect the hedges to get knocked out rather soon, to be honest. All of the hedges, which is ironic, but it is the case. This movement didn't start before people could get exposure to it. And you want to know what that makes me think? Is that people have a chance to put their stops up here. Whereas other days when we made all-time highs and so on, you come in at 8:30, it's already down 100 points. It's already considered low when you open up the 1 minute. A lot of people will be trying to fight for it. Today it wasn't like that. Today it let them. They let the American public be in from this high, which is interesting to me because it doesn't do that when it usually matters. It usually starts at a peculiar time that's very difficult from East Coast and West Coast America to be a part of, like 2 o'clock in the morning. If you want to be awake at 9:30, it's really hard to be awake at that time, basically. And for it to start at that time, and for you to monitor it all the way through to the open and be awake till the close, it's just inhumane. You could expect teams to be able to do it, managing assets, but individuals, it's tough. This falling wedge broke out of the bottom more than it ever has before, and it has provided another third low. Is it going to be interested in not getting back to this one as well? Now, I'll tell you one thing. It will have to break the yellow line by 137 in order to be able to get to it. That is something I start to really find it attractive, honestly. Because I'm like, well, it's not like we're not going to be in the business of hitting the third drive anymore. Um, I do believe that these levels will be tested, maybe just not off the third drive. How many times have we seen a fourth? Is this the fourth? You know? I mean, I want to say last month. Yeah, maybe last month. We saw more four drives than any month going into that. I'm like, well, to the point where it was noticeable. Four drives. Does it mean that these are not in danger of hitting? No, 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 no. They are all still going to get hit. On the break of all of the trends that you see on here, if they're pointing in one direction, they're designed to break in the other. The trends are not your friends. They will break and move in the opposite direction, I guarantee it. Every single one of them. It's a matter of when and where, not if though. If you're stuck on if, then you got a major problem. It's a matter of when and where, not if, because no, I'm not going to say because that, but in the end of the day, in order to maintain with these trends, I'll tell you what is required. We have to maintain a degree of 52 degrees constantly. No sideways movement is allowed to take us to the trend, or we basically have to exert more energy at the rate of 52 degrees to stay down below the trend. So overnight, you must be continuing to move basically vertically. By the open tomorrow, if we're to expect that, we would be roughly down here by the middle of the night, and I'm like, no chance. Good luck with that. Unless the whole country catches fire in a minute, I mean, like, we're not doing that. It's just not happening. One thing I find interesting is that this B point, the last of the three, not tested. Not on the initial move at least. But you can't say that it's not fully tested until it crosses this low. Because until it crosses this low, this will be the third low to these last three. And there's no way we can mathematically change that, right? Like, I don't care if it comes all the way to here and then goes there. This is the low. And it will be the third one that it made last, right? Because this won't be a third consecutive low or a fourth consecutive low. That would be. But it's interesting that it wants us to understand that. And I mean, having understood that in many of these environments before gives clarity to the situation and understanding. So, you can easier find yourself a part of it if you choose to be. Obviously, they're not the most incredible moves. But it will come to an end. And I'm like, who's to say between 1 and 2 o'clock we don't break this line? Okay? This line is the most important line. I don't care about the other line that's coming from the top, actually. Ironically, I care about this line. This line is the one that, the one from the top will have to break. Doesn't mean we're not going to be in that downtrend, though. That downtrend, until it breaks, we're in a downtrend. It's the final downtrend of this environment. First B point is knocked out, and it worked out fine. Worked out fine.
It's the third drive down, yeah.
Well, yeah, fourth maybe even, you could say.
Yeah.
Yeah. The last third. So I know that when it makes a fourth drive, like let's say it makes 10 drives even, when it makes it back to the last third one, like it is now, you always want to make sure it's safe. If you're part of it, like it's really important because it can always get to the third one back and then decide to make a large advancement down, like 1, 2, and 3 comes back to the first of the 3 and then it continues to go down, and you can see now this is actually the last one, so it could come back and try and grab that one, and it can continue with this process where at any given time if there's a third low that's untested, you could find it trying to get to it. And what they do to the falling wedges now is just atrocious, really, because I'm like, is this what a falling wedge that works looks like now? Because this is what it puts people through every single time that it tries to actually give anything of value. All of the noise, I guess you could call it, on the top is presented again on the bottom. Oh my goodness. You know how remarkably similar that is to what we did at the beginning of the day, where we started off, where you could say the VWAP on the other chart, which was roughly connecting right through the middle, originally had a spike on the top that had a consolidation, and then originally had a spike on the bottom that had a consolidation. And when it was doing that, it met the equilibrium and then it finished. This is something new. I mean, you could say we're kind of in the business of doing something similar, where we had a spike and a consolidation, but really it's kind of just like we had a big spike and a little spike on both sides. And sure, I can change it from a circle into a smaller spike, into a smaller spike. And I'm like, oh, it's not a flat level, it's an angled level. All the more chances people won't be finding it. All the more chances we can repeat this process again in the future, and people will be absolutely oblivious to it. Just making a flat part in the middle where we have a spike on one side that's larger and a spike on the other side that's smaller, just like that. And this is one way for it to start at this point, cross through the middle with the biggest being a dump, to end right at the point that it started. Absolutely big waste of time. Sure, because it's not providing any long-term cores any justice, right? When it just returns back to the middle and its primary objective. Now, when it does it on an angle like that, do we know that it's actually harder for it to keep making this the middle? Because the middle, in an hour is going to be down here or whatever? No. You know how hard it would be to continue making it even on that line? I say it picks a new middle. You know what I mean? I'm like, just asking too much out of it there. It's too much to ask out of it. Um, Especially when the name of the game today has been to go sideways so much. Like, it might not seem like it for the majority of the movements, but when it all ends up being in the middle by the end of it, for what you might have experienced being the largest downwards move taking a long time, and it taking the majority of everybody's waking day, is spent by potentially making this move right back to it, like it did here. separated by a big dump, where typically, people don't realize the last thing to happen is this big bad downtrend. What happens to it? It breaks. It's toasted by this move. And I mean, like, how is that a bearish pattern if the last thing for it to do is to come up and meet the middle? Is there a chance that it could have blown right through that middle and continued going higher? I can find you 1,000 times where it did. I can find you 1,000 times where it did it easily. But one of my favorite times, actually, I can't help but think about it. Actually, on this chart right here, right there, sideways, up, down, meets the middle, boom, never comes back. Did it again, and it's done it before. Here, in a really weird way, it started in the sideways area. It went up. The biggest move was down, scared everybody out, but made them into sellers so somebody could buy, right? They provided liquidity. And any of them that tried to catch the dip, we ate them up too. And then we go at a time where it's like, oh, do you have the guts to continue holding? Through all of that environment. And it's like, well, that was the agenda. And on that day, we will find that the agenda was made clear. We could see exactly that that was the intention of the bigger players, and that the people were just part of their agenda. They were part of their liquidity. And as soon as they were pushed out of the way by things that were, that would be considered difficult to the average human being, like taking time, taking pullbacks, all that so on. And the fact that it was difficult multiple days beforehand, it's like people's willpower will have been kind of tarnished a little bit, I would think. Because it's like, oh, yeah, catch the lows today and then hold them through overnight. Oh, it didn't work out, came stopped you out, and then you have to catch the lows again to hold them, and it came and stopped you out, and then you do it again and it came and stopped you out, and then you're like the next day it's like, oh, I better just take the profit while it's up here at the close. I'm like, no, weakness. You hold again. And I'm like that's the thing. People get weak as it goes on. They think, oh, it's not working for me. I have to try something else. God forbid they don't persist. Persistence is right out the window when they change. And I mean, like right now, I'm like the red yellow line is clear. I don't see an instance of the day where we don't break it. Might break it like crap, but what are the odds it breaks us up right back to a spot that makes it seem like it's the middle? Because is it the middle now? I mean, no, not if anything significant, right? Like, you think the bigger players are going for this to be the middle? I don't think so necessarily. What's funny about it is, as much as everybody's presented with downwards for the majority of the day, it all leads to going back up through the high. Mark my words. And it doesn't have to be at a convenient time for most people to catch it. But if you're holding, it shouldn't matter, because you don't have to play this game every single moment. All you have to do is, if you spent the morning catching a hedge, then you put an alert when it gets close to your entry. You take some profit off while it's at the low like this, and then you can wait for your hedge to get knocked out. And that is the best strategy to have. And you don't have to catch a single low because you're in from yesterday, or you're in from a low before today, or any low of significance. But if you catch that hedge, you're just waiting for it to get knocked out. If you didn't catch the hedge and all you have is the core from before, then you're just waiting for a new high, having made no profit on this dump. That's fine too. But you avoid having to catch these lows if you're holding from previous days. And I mentioned this going into last week, that you wouldn't have to catch the lows again if you just held. So it's the case. And we will have this again, except it's going to be in reverse in the future. And except it's not going to be as grindy. It's going to be dumping. And I'll be saying, oh, well, you should have held the highs when it was made clear. And when it's made clear, I don't decide when it's made clear. Like, the market brings it to me. All I can decide is whether or not I'm there for it, you know, like there to reel it in when it provides itself. all of the aggressiveness that there has been in trying to catch the lows today has amounted to much difficulty for those associated with them. And it doesn't mean that you had to be a part of it. But you could recognize that, hey, it's went on for a long time now. And that it could be closer to the end than the beginning. I can tell you that we're closer to breaking that red-yellow line than we are away from it. Like that's one thing I think. I'm like, that red-yellow line is certainly on the radar now for everyone. Um, And I mean, it's not very far off from the yellow line that's below it, but the yellow line that's below it's going to be a line that I think the people are going to have. A lot of people are going to have that line. And it's the ordinary line, I think. And I think it'll be spent trying to stop people out around it. That would be the play, at least. Right now, trying to make the wicks and spikes that we may return to back later. We might return to after a major move later. Like all of these lows right here, you want to know what they remind me of? They remind me of an environment where we would go like this after, and then shoot up and take all of it back just to this point right here. And it won't be like, oh, you didn't find value below the falling wedge when it was actually more effective. When it's like, oh, this is what a falling wedge looks like when it works now. Disgusting, but it's true. I mean, is it not the way to the break of the yellow line? Is to be in from before the blue one even gets tested. And at the end of the day, for what it gives, most of it can be taken back in one big move, just like this. Oh, here we are at the wicks and spikes at the bottom. Test it from above. Test it, and we go take everything back. I'm like, oh, deja vu. Basically. But the kicker might be a smaller version or a bigger version. Same concept though. Same concept. And I'm like, well, is that concept going to break me if it happens? Well, no. Are my stops preventing it from happening? Like if that process was to happen, would I lose my positions? I mean, that's a huge question everyone wants to ask themselves right now. I'm like, well, like that's, and it makes you think, right? Like it makes you think. You have to you gain responsibility at the moment that you're thinking about that. Like you understand, like okay, this is something that is going to have a potential impact. How is it going to affect what I've done, or how's it going to affect what I can do, or what my plan is, or was, or because the thing about plans, right? They're always really important to have, but there's nothing wrong with changing them. Nothing wrong with changing them. If something, a new variable is involved, like, is it not true that the plan can change and still be just as successful? Like, in anything, it can be that case. Like, you can plan to go on a hike and you've checked the news and it rains. I mean, well, what are you gonna do? At the end of the day, it's happened before. I guarantee you. So it's like, you know, can we be prepared for the environments when they arise, regardless if they're part of our plan or not? And if something is suggestive of it eating back into your existing trade, to have awareness of that and to prepare for that would be the only way that I could say, if you look back in retrospect, 2 hours from now, it's like knowing that this can happen and not doing anything about it is a problem. you know, and like if you're in on something, it is. But if you're just observing, that's fine. You don't have to do anything about it. If you don't know about it, then you shouldn't act on it. Okay. But at the end of the day, this is an opportunity to see how well something does work and to see how well you understand it and how well you can find it in other environments, to see how well it works in other environments, to see what exactly is particular about this environment that makes it not work if it doesn't, right? Like, let's say it doesn't work, right? And it's just brutal and it goes sideways. I wouldn't wish it on anybody, but let's say it does. Because at that point, nothing really works, Nothing's working for anybody when it goes sideways, right? At the end of the day, and these are big lines. They're not designed to break and go sideways. Every trend that's of equal size or significance in the past has been responsible for bringing us back to the middle. And this one not doing that would be a big stain on the reputation, you could say. We've already had one close call with that first of the three. It's funny that they're hit now, eh? You know, every single low that they ever had in there is they've cleaned it all out now. You know, doesn't matter if it was 4, doesn't matter if it's 3 or whatnot. They cleaned them all out, one swift go, and they still didn't break the final trend. This trend, it could be used to stop people out. I think it's dangerous. I think a lot of people will have that trend. I don't know exactly what it will do to them, but I fear for them. Let's watch. I'm curious. Personally, these people are going to get a shitty trend break, and after the red yellow line, I don't think it's going to be treated the same way, ironically, but less people will have it. And it just shows as well as I'm like, why do I find value in the things that I guarantee less people will be aware of? And it's like it just shines a light on, how valuable people are to the market. If they don't have awareness of it and it's moving on things that they're not interested in, do they matter? It's really interesting to me. I think that. I'm pondering it all the time. And they matter to the institutions, but the institution's agenda above all is what matters, I think. And the people are part of it. Because they wake up every day wondering how the people are going to respond to their actions. And the people wake up not even thinking about them, just wondering about what other people are going to do. And like they matter. I'm like, no, 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 no. You look at what most people look at, you can see it doesn't matter. That's the irony of it. And that would make me change right there. Like, how many days could you go on acknowledging something, being shown that it doesn't work, and you impose it onto the market every single day, and it keeps teaching you that it doesn't work. And I'm like, well, that's crazy. People will keep the indications on there that do those, that have those results for them when it's in the name of maintaining their strategy. When the strategy has negative results, it's not good. And I like to have a very, very open mind to it. Every day I'm like, what's the strategy for today? That's how I come to the table every day. It's not a matter of, oh, this person's strategy or that. It's how are we going to strategize around the moves that there are today? What are the components, the variables, and how do we use those variables to our advantage to find an understanding of the situation and then to take part in it in a clear, concise, safe way with a clearly defined risk reward profile? And to not find interest when the market dishes out crap. Doesn't matter if everyone's eating it or not, right? At the end of the day, we choose whether or not we're going to find value in it. And so far, what the market has provided today is nowhere near what it has the previous days. Anybody that had the weekend to look over what it's done for other people could come in and think, wow, I want that to happen for me. And what has the market given to them? It's interesting that it's given them nothing of the sort. It's given them a long wait. A good hedge, you could say. One that's easy to hold, one that doesn't threaten you many times at all. One that from the beginning of the day has been held the entire day, I think, by the biggest players out there, and they're waiting for everyone else to be out of their long trades before they make it go up again. And if you're long from a previous day and you're looking for it to go up, you can trade back to the point that you started to get in from, but then when it repeats this process again and goes higher, you don't have to find out where this is. You hedge to take profit here. It doesn't matter if you've even taken profit on your hedge there. Now you're waiting for your core to continue, not catching these lows, because you're in from below. And you hedge to this area here. Like I said, taking profit on hedges is really nice. And at the end of the day, if you're exposed, from any day before, it's so remarkable. Like they count on the fact that nobody will buy at all-time high. And nobody did. Everybody was fighting against and they all got squeezed. And they don't even know it either. I'm like, why isn't the news talking about this huge squeeze that just happened? Like, I think all the ordinary people in the world were short, and it squeezed through the roof. You know, it's not like there was a good news article at the beginning of that run. It was a bad one, and it dumped hundreds of points in a range that didn't even move 100 points, and that's how it begun. Gave everyone really, really, really sideways. Gave everyone that, and then report came, and it was like, wow, we haven't seen this in weeks. People that just started trading in there or anything like that, they will have never seen that before. And what do they think about it? And then it gets ultimately bought back up. If they're part of any of it, taken out again. You have to keep holding through the end of the day. The end of the day was there. And I find that many of these lows happen on the same kind of movement. Like I said, this is what a falling wedge looks like when it works now. You see that? It's crazy. Atrocious. Right? I don't even have a word for that. I guess atrocious is a good one. Because it's not how it's supposed to work, is it? It's terrible. You know, how it's supposed to work is that. And the rest is history. When it does this, how does it impact the people that think it's supposed to do that? Well, what do? If your goal is to buy inside of the falling wedge to make it do that, and it does this, do you get stopped out? Yeah, it's tough, it's rough, and it's not very nice about it. And I'm like, hey, that's tough. Well, God forbid we don't, you know, we don't understand that it does that regularly. And this is what it looks like when it's most effective. And is it not the toughest, though? I'm like, wow, that's true. It is the toughest. It's nuts. The toughest leads to the best results. And if there's one thing, like, that could be added to the box of, all right, tough situations that led to profitable endeavors. You know, strike what? This could even be one. You know, and we could tally them up and remember them. Not much has changed with the way the fibs are set up. It is the case that in this node at the high, which is the node on the other charts too, um, it does have a large node that is encompassing two 61s. The 61 from here, and also the one from the other low too, which is like a little bit higher. You know, barely. But basically, it means that there's 61s inside of this node here, and that node is basically where the 61 could be considered hit. Of course, this is the actual 61, but I could see it going past it to hit the other one. That undeniably would be this much higher. So I'm like, well, you know the lows here. This is where it could pop to. What's that the size of? The node. So I'm like, I definitely do consider that. Many people will not consider that. I consider that. It's a mathematical fact. So I do consider it. And it's also the size of many of the other consolidations that we've had after that. Like the confinement area that we had when we were in this zone here is suspiciously particular to the environments that we've had in the future that have also amounted to, you know, important small consolidations that have otherwise led to bigger moves. Now, what's funny about this one too is that it even had this move associated with it, just in a different way. But is it not true that there are two boxes, one here and one here, and all of the movement that we had out of the bottom returned back to where the box was? Or am I insane? You know, it's like it has to be. You know, I can't be the only person seeing this. It's like it is a fact that it did do that. I can't take it from it. As much as we like to assume that things are happening and if things like this are happening and we get one of these and we get one of these and we don't allow it to do that, I mean, that could cost us. So it means if you catch a high and you get that, and I don't really care if it's upside down or whatnot, if it's a low, you know, and we get this kind of move out of the top of it, obviously going in the other direction, it's not going to go backwards, of course, but is this how much we move when we move against the trend? We did decide to make this the first size of the consolidation after having broke the red yellow line. I cannot help but like I mention it because it's a fact. So I'm like, what else is going to decide to make clear? Because did you know that we've been in the business of making huge moves off of this consolidation ever since the beginning of the day? I haven't recognized that as such a small area, but it's made clear after. I was going to say hours. Then that's not hours, but may as well be when you're in there. Um, the consolidations have been really tight. Now I'll tell you one thing: which consolidations haven't had wicks and spikes out of both sides? Is it not true that when we make these consolidations, they're absolutely notorious for making wicks and spikes out of both sides of the consolidations? We can see that here and here. And even on the short term, the way that it all began was by making those wicks and spikes. You could say that it's interested in doubling the range. That's an interesting perspective on exactly why these little ranges are here. And I'm going to go to the other chart. With an accurate depiction of what the volume actually looks like. Something I think I can actually leave on there. Because when you see this, the goal is to be able to understand that on the other side of this white VWAP, we had those two levels. I'm just going to do that one more time. And that when we finished that, it was done. Now we do something else. And I just like to have that understanding of that we can spend a whole lot of time doing this. And God forbid we do it again somewhere else. Like, something like this, a spike, a circle. I can't say that it did it again here, but it's very similar. Even with this one maybe. But still, regardless, looking for something like that's really important because, like we'll see in the video, there are times like this where we can do things again and again that have the same characteristics from different days to follow three highs with a fourth, three lows with a fourth that's the farthest, and being able to have them both on the same side of the spectrum and then complete them again on a different day is remarkable. For it to be such a large portion of the day's movement is to have an understanding on a lot of the day, to know that it's doing that. To understand that that's the part of the day that we're doing that takes all day to do that. And that's what we've been doing all day, not today, but on that day. And what's weird about that, I'm just going to throw it out there, is that's how we ended up going from one point right here, coming all the way up, and going all the way down, and just ending up back at the same spot. And the same kind of thing happened here, of course. The falling wedge on the other chart did more than work out. It brought us back into this range where we have a POC, and effectively that POC I think has a lot to do with the one that we have up at the 61. And it's true that the 61 still is a heavy volume node, regardless of how we made a slightly lower low. I don't think it matters. What we're left with is a gap that's roughly the size of the node, like itself. Like this is roughly the size of the node, no? And I believe there's one here too. Sure, we put some extra volume below. But this level is the green zone, the original. Now, of course, these levels have never been used as a range before. Like, I don't consider the movements in the middle here really ranging this range correctly. I see it setting up, though, for an environment where what we have done out of the top has attempted to replicate out of the bottom multiple times. Back to the POC itself. And why I recognize that is because everything that we can see that ever happened out of that red zone since it started came back to it. And everything that's always happened out of this green zone has always come back to it as quickly as it's left it. Like, these are wicks and spikes if I've ever seen wicks and spikes, right? You know? Like, they're really hardcore. And what are these at the top of the red zone? Heavy duty wicks and spikes. So, you know, like this could be a pullback eventually as well. Like, we've pulled back this much before. Not too much, but it can be a pullback that I guess it's become a little bit more comfortable at making that pullback since we've been in this little downwards area. But we have to understand that every single thing that's ever happened below that red yellow line could have been a characteristic of this trend and this environment when we were in here. And anything that's happening now on the other side of that line is unrestricted by that red yellow one. And one thing that really stands out to me is the fact that we ended this kind of chop with the same kind of movement that brought us into it. It's beautiful. So this is one way for us to finish this sequence. And I'll tell you one thing, it's very unfair about it. I think that maybe doing a double could be on the table. I can see one thing though, like even from this trend break here, it's been very like forgiving for the stops in the steps on the way down, basically making new new steps without covering the old ones. Like when we make a staircase in the market, the ones that are the most forgiving, it's kind of like what we're doing now, where basically every single high that we make, we don't cross the previous steps low. And it makes it really easy if you're dragging your stop down the staircase or up the staircase, because you know that when it makes a new high, that previous low that you were just in is gonna basically save you. And what's funny is when it all changes is when the trend can break. Like you can see the first step was knocked out on the trend break itself. And then they went for another one. And then this is the next one. And I mean, that'll be the most steps that we've overlapped for quite some time. And it's directly in association with the fact we've broken that red yellow line. And I understand that that's the case. So I can see that where we are right now is also the tip of a triangle. We did return back to that triangle on leaving it, but then we returned back to the tip yet again. Anybody that is part of that triangle, I mean, like, who's to say we don't make an S wave around it? Many of the triangles that we've had have involved us being able to make this movement. It doesn't really matter which one of these two movements it does first, but at the end of the day, when it overlaps every single part of this triangle, regardless of what it does, it's kind of intriguing. It's unforgiving for everyone that's part of the consolidation. And in this case, more unforgiving for those that are long. However, we can see that the falling wedge from before ended up breaking out and staying uh, intact until it was the size of the move that brought us into that consolidation. Like when this consolidation started, it was because this move ended. We did that move again. So could it be completed? You know, it did return back to the point of control after all. All of the spikes met their baselines. All of the triangles have been met. All of the B points have been filled. It's interesting. With this new most recent move, we do have a new trend.
So 161's playing a pretty big role today in a lot of these moves.
The 161A on the short term?
Yeah, well, this move at the bottom was from a 161. This one went up here to the 161, and it's coming down now. So
Oh. Back at the blue line. Blue and white one. Getting close to where we could put the 61 up. We're at the 50 right now. Oh yeah, it's created a B point under here at the 61. Done the retest there at that sorry, 78% retracement and the blue no, sorry, the red and yellow line. But now B points exist at the 61, so testing it from the other side is acceptable. At the end of the day, still more of the same kind of movement. There it is. Volatility is definitely increasing a little bit there, but not like I say, more of the same kind of movement. It just went sideways, up, then big down, right? Like everybody gets to see the big dump, and they all get to think that it's part of them needing to sell. Whereas it's not better than this low, and it just came back to the wicks and spikes that there were at the bottom, and a deep retest for sure. I think the next time we break this line, which will be the next major downtrend break. It'll find it a little easier getting through that POC. Of course, there's a lot of space from now until that downtrend, but means there's a lot of room for patterns. And since we've been moving down and charging back, it's been very much like a series of 5-wave moves that have gotten us to the reversal points.
I got a VWAP down here too, John?
Oh yeah, interesting. Longer term, I suppose.
Yeah, I put it in around last Friday around 9:44 in the morning.
Hmm.
There's a bit of a consolidation there, so.
Yeah, the one that I was using, I put in at the end of the day. Take a look at this one. Yeah, this one I had on the other chart here was coming from 210, 1410. And that marked the middle of the day there. This one marks the low of the day. Both of the VWAP bands are kind of together, which is kind of interesting. And they're going to cross soon. It is kind of like another phase A where we have preliminary support, selling climax, automatic rally, secondary test. Next thing would be to get up here and get down here and then start phase B. But phase A could end. Phase A could end here. Wasn't on this chart that I had it before. No.
1 it's getting some resistance for the 15, trying to push up through it on the RSI.
Yeah, they're both so close to the bottom though. The break of the red yellow line could be near. It reminds me of other times that we've had trend breaks of significance where they're both close to the bottom and then the trend breaks and then it can actually get a little bit more out of the move.
Mm-hmm. Well, it's probably very similar to the last move we had too, if you look at it.
Yep. Last time that we were doing similar things. Now if we break the red yellow line sooner rather than later, we could expect it to actually create a W that looks like it has two B points in it. Here and here. The red zone is still a major attraction to me. I do like the 61 still. From the entire day's high to low. It's remained the case the entire consolidation. I just think that it's attractive to the institutions as well, and they just want everybody's position. You know, they just keep coming back for it, coming back for it. Every time anybody gets stopped out, they hold your position. And they plan on selling in the red zone, where it's likely that they'll just keep everybody in a node. So I put that there. It's 61. Don't have to keep all the lines there, but effectively, I wouldn't be surprised if they were interested in putting everybody in a node for the imbalance in a more centralized area. Doesn't have to be on this particular run either, but we still have some space we could use beneath the red yellow line. I know everything that has happened off of the green zone has returned back as quickly as it left it, but sometimes we're in the business of making W's underneath, and that's how it all began. And if it chooses to end like that, it means that there could be an attempt, a jab against the people that have a position for the break of the red yellow line. So it's wise to make sure the stops are kept at the extreme and the target remains the 61 in the red zone, the node up top. The blue and white line, it marks the end of phase A. Phase A being here. My point is in this Wyckoff schematic. Phase A is very similar to this scenario, where what we have is very much like the circle, and it's the PS, the preliminary support, the selling climax, the automatic rally, which returns back to that preliminary support. So all of that happening right there. Then it dumps off, and it's not all the way down. It's a secondary test, not all the way down to the SC. You can see that that happened. Not all the way down. And then it does this little crappy move, and we're there. And I'm like, yeah, at that point, we are at that dash line right there, right? And everything's been completed, as far as I'm concerned. Phase A is very accurate. It follows the rules like suspiciously well. It's actually one of the most effective patterns at being able to complete its cycle. Sure, it's not very lucrative, really, but I mean, it can be. I mean, they're sometimes they're bigger, but not really. They're they're usually small, and they lead to consolidations, right? So, I mean, after phase A and its accuracy is met, we can be met with something that looks like a triangle, and then it could lead out to being crappy. It may or may not have a spike at the bottom that cleans everybody out. That's why phase C is so controversial. Remember, phase A can end at this point. When it does this, it doesn't have to stop. Phase B is so bad that it might not even care about the moves. Now, I'll tell you one thing. Phase B is effectively forming the way that it's supposed to as of now. It didn't get through the whole thing before, and I don't think it's going to do it now. But basically, what we've done so far isn't just to the blue line anymore. It's kind of, maybe actually. Has it come past this point yet? No. So we haven't done that properly yet. That's this point. The automatic rally is this point right here. SC at the bottom, ST here, and then you've got the PS like that. Basically in line with all of these. There's 4 points. 1, 2, 3, 4. Same thing goes here. And basically, it's like an N. Well, really like a W, but the majority of the times that you'll see this, it's kind of like this preliminary support is like a platform, right? And it's the first support that it makes, the preliminary support for the entire consolidation, then comes down and hits the selling climax where it hits this low, the pinnacle, and then basically returns all the way back to that original preliminary support in this automatic rally, which is a strange thing to call it, but that's okay. And then all the way back down to the secondary test. Why there would be a secondary test without a first one is another interesting thing, but it's the way
This
that
little short-term high here is coming off 188, 200 to the B point down there. They just hit it, so.
triangulating right now, yeah, for sure.
Yeah. Mm-hmm.
It's good to have an understanding of those fibs, though. They'll lead to the bigger ones too. 61 played a big role in there as well. It's like we've done this 61 on the high here, and we've managed to fall to another 61. Like this 61 was right here, and if I take those off and apply them on the very short term, it's like we're falling through a 61 right now. But everything that we've done has effectively come to another 61 here. So just like this was a 61 up here, so is this. Good way to put triangle in the area there. Seen it go multiple 61s until it can't do any more 61s at all. That's sometimes the agenda, but I think that very much a similar environment to what we had here. Where it may not have been a 61 to pull back this move here, but whatever this move was, it seems to have done the equivalent here, and then the equivalent here, and then the equivalent here. And then it continues to go into an oblivion where it's forced to start expanding again. Basically, that move continues to pull back roughly all the way into the last move until it can't anymore.
61.2. The other confluence was 1 minute, hit the 15 on the RSI.
Oh yeah, that I was considering that when we were moving in this environment, I noticed that, and I'll show it in the video too, that this environment changed how the momentum indicators were being used from this environment, and that was a hell of an environment where it's like, how many triangles is it going to? Doubles an understatement, but you know, it's still going according to that, but something we'll have to deal with here now is an expansion, just like before when we finished this ability to basically contract into an area that's so tight that barely any movement can happen. It'll be forced to make some sort of larger move, which typically has been something that looks like this and this, these two movements. Oops. For this amount of congestion. It's a point where hedges are definitely threatened. I am more attracted though, honestly, to the exterior VWAP bands being so close to each other. I think that them touching soon is something that we haven't really seen before, so I'm kind of interested in that. See if they have I am attracted to the level, but in this case, the red yellow line is definitely the elephant in the room.
You can break it, John, and then just sit on top of it and go up or what?
Um, the red zone is something I'm looking for. The thing is I would like to get it off of the purple lines down below, which is ironic because it could mean that there could be some sort of fake break involved with that trend line. That could involve making a spike out of the bottom of this entire range, roughly the size of the one that we put on the top. To get that, that would be ideal, but if you've already caught exposure to this move, you know, there's a chance they give you the red zone as well. But if I was to talk about what would be ideal, those extremes are definitely ideal. Especially if we're reaching to them in the form of wicks and spikes that are stretching outside of the comfort zone in order to get to them. Similar to the moves that we've had down to the VWAP here, or to this VWAP that you've put in. It's very appropriate. Now just remember, when this last trend was formed right here, right, the yellow one, Notice that, it was formed from this high and this one. And then when it hit it, it was terrible. Hit it again. It couldn't break it. Terrible. Hit it again. Terrible. 3 times in there. Hit it. Finally could break it. And then I'm like, well, this is the first time we've ever touched this line. And it's at the baseline to where all the spikes and wicks begin. Everything begins out of the bottom of the green zone, and it's remarkably returned back to it as fast as it's left it. Some hiccups can happen along the way, but basically the way that I see that is it's part of a characteristic that it's done so much where the trend is broken and it's returned all the way back to the point that it broke the trend before allowing anyone to continue. And anybody that kept their stops at the extreme still favored, but doesn't mean they've been super forgiving on days like today because it's going after people that want to buy at all-time high, of course. So you can tell it's not huge money putting their stops at the bottoms there. It's just ordinary people. And each one that we make, there's less and less as we get into the end of the session. Less and less people will try on each pullback. And each pullback happens because it's effective at getting a lot of them out. Because a lot of them don't buy underneath the trend break. A lot of them buy after. They're waiting for confirmation. They wait for the move to be over before they buy in almost. So I'm like, well, at the end of the day, who makes the low and why are they responsible for that precision reversal? And can we be interested in it too? Or do we always have to be late in the trend? Like I find a lot of like it just doesn't show like consistency to me if it's just so late in the trend so much. Like I understand if it's such a crappy range that you can't get filled on the extremes or something like that, like pre-market sessions or something like that, or whatnot, or high volatility areas where if you hit the market buy, it might just give you the middle of the candle or something like that. But um, that's different. Doesn't mean you don't find value at the reversal at the right time. It just doesn't fill you at the extreme, and it can. It depends. Like the uh, the prop trader accounts, they're a lot easier to catch those extremes on because a lot of the times I don't even think they're actual contracts that are being respected by the market. But it's a whole other conversation. Yeah, and that could work as an advantage. Basically, the liquidity on CFDs doesn't show up on the actual exchanges, like when you buy stocks and so on. And the majority of the prop traders are in the business of CFDs. Or, or not exactly CFDs, but variants of them, which is all derivatives, really, when you get down to it at the end of the day. So we could say that, like the other times that the trend was formed, the time after we had a negative response. And here, when the trend was formed, negative response, as it did before. How many negative responses did it have before it was done? I don't think it's going to have as many negative responses, but at least one it looks like it's making. You know, it's tried to test it like roughly 4 times in that small consolidation there, and it didn't manage to get through it any of those times. I don't think it's going to be anything like this, but sooner it gets through it. Don't think it has to make as much of a impression. Continues to triangulate. Basically very similar, like I said, to what we were doing before. Very, very tight consolidations inside of each other, continuously retracing back into the previous move, into this tip that basically forces itself to end. I mean, we know, give it 10 minutes, it'll have to be out of it. And that means that we're either gonna have to look at a trend break within the next 10 minutes. It's very likely to be out of this middle area by the time that 10 minutes hits. Basically, it means that at any given time within 10 minutes, we could be interested in leaving this triangle. And the first step would likely be in returning back to it. The first direction that we leave doesn't have to be the last direction like the other triangles, but some triangles haven't been going through the other side, like this one, for instance. Didn't manage to do both sides. It did one side and pulled back on the people that caught exposure to it. Not quite all the way back, but close enough like this one. And close enough like this one. Close enough like that one. And when it goes, you can see it's almost all the time close enough like this one. That's how it all started. It's true that we're coming into power hour. The imbalance does become part of the end of the day. These triangles, we are very likely to see them tomorrow again. And it's an appropriate triangle, I think, for tomorrow. We'll see. We'll drag it over and see it. I'm pretty confident that that's going to be an angle that we're going to be interested in again. So it's just good to have it on top of the mind for understanding that we could be in for things like that again. And that their results can have as much impact as what we've seen here, including on being able to do it on the other side, which we have yet to do. And I find it ironic that doing that particular move on the other side of the triangle would get us exactly to the 61. which is the gold dash line. It doesn't have to be very forgiving about it. After all, making everyone buy, and then trying to jab against to grab their positions before getting to their target, really normal. And it's been very, very slight every time. Like I said, the most attractive area would be the purple lines to be exposed from on the short term. You can see that the difficulty can be extended into power hour before returning back to that 61. And then when it does that 61, it can take all of it back to this point on one big pointless move. But yeah, that's the prospectus. Basically, you know what it reminds me of is what we saw in reverse. See how it went sideways like that at the beginning? Very subtle sideways, right? Then it popped in this direction. What you could say would be the wrong direction. And then it went down that much, right? Just to reverse to there. What if we do that in reverse? What if we pop down to hit the gold bars and then come all the way back up and then just reverse right back down to where we started? Is it not going to just look exactly like that? Except in reverse? So component 1 sideways, component 2 small move out, next component large move, next component large move, and then a return back to the flat part, One big way to produce this. Basically, it's not the most attractive move in the world, and I think it's basically going to keep everyone contained within an environment. It's going to flush a lot of people out. Like, a lot of people are going to forget to sell when it goes up, I think. I think that's going to be the interesting part about this move. Where today's been a day where they've went back for so many positions, I'm curious to see who they end up letting into the close unscathed, if any. If it was to continue in this movement, it would be these. Obviously these ones up here have been unscathed for quite some time, but these people right here would have the most value in being exposed to the red yellow line break, and I mean they're in danger of it trying to snap against them. It's like a phase C, may or may not have it. If it does, then they'll have to be prepared to grab it again. And I'm just like, well, the easier play was holding from yesterday or Friday at the end of the day. Because none of it has to be risked, none of it has to be taken, none of it has to be tried. Because all you have to do is take profit on any hedges, generally in this area. Generally. Doesn't even have to be specific, not like going long. I think about 70% of the market populace is trying to catch it up. So, and it's the first day off of all-time high. Side accounts and stuff, hedges, they're okay if you're short from the high and you're trying to hedge against it. It's because you want that hedge to go above your short. But that's not the way I recommend doing it. At the end of the day, it's been a grind for this consolidation, and the POC is something where every single move we've seen has ended up back at it. The last move has been very specific. Will we see it again before the imbalance? Will the imbalance happen at it? Can we make it the middle for the imbalance? That's what I'm looking at. And I'm like, okay, two things that I see. It's like, well, yes, we could, in the event that it becomes a more attractive environment at the purple lines, that would be great. But I'm like, even when they get the 61, if they haven't gotten the purple lines, guess what? Probably end up going to get them right after. Not right after, but the next move in general. So I wouldn't be surprised if they don't let it easy for the people at the bottom today. It's going to be a matter of hopefully they took profit. I think that's the way that they're going to end it today. with this move in particular that involves the 61 in the red zone up there. Whether it starts on a spike or not, I just think it's dangerous and not something that is good enough for me. Like what it is, if I zoom out, is this. Going long here. I'm like, no. It's okay to hedge it and take profit. What you're doing is fine, hedging, and then you cover that's a buy, but then you're out of your position. And generally, even if it's not the wicks and spikes on the bottom, good spots to consider taking some profit, because at the end of the day, I expect all the hedges that have ever been taken today to be wiped out. And if you fight for the long, then it's your job to get one. If you don't have one, then like tomorrow will be more difficult, I think, as it has been. But today was a day where the institutions will have made money on hedges. They will not have went long from today. It will be a matter of taking profit on hedges, and the long will continue. This is that position at work. That position that's benefiting the people that made that move not being acquired down here. I'll bet my bottom dollar on it.
It's top of the hour.
Yeah, it could be an increase in volatility. End of the triangle at the very least. But I will go over one more time the 8:30 in the morning position. The name of the game today, basically. Yeah, the name of the game this morning for anyone holding is to find a short hedge. If you're not in, then we will find the extreme. It could happen before you show up, meaning people were too late, or it could happen at 2 p.m., which is too much time to wait. All I can say is that we can be ready. Nobody decides when it happens. We decide if we're ready for when the opportunity arises. There's only so much time in the trading day, and it's not much. For those that are, for what is worth catching the highs and lows, we know working hard to catch a move like this one puts you in a position where you get flexibility to come in and see how much progress you're up. You know, like check the trade progress and see how much you're doing. You don't have to decide where the low is because you're already in. At the end of the day, you know, that could be from any time before this. And it's been the story of like the year. I'm a broken tape record with this. And basically, um, you know, I specifically said if you sell, you lose. Though, remember yesterday, or not yesterday, but Friday, and that was the play. But it'll all be in the video. I'm gonna make a really long video too. It'll be like a movie almost on this entire move, so everyone can see the ins and outs of everything that I said about it as we're going up, and every single thing that I said about it to this day. And you know, simply focus on trading in the other direction until you hit your targets. Basically, above all, today we will focus on the opportunities the market provides against the trend while waiting for the long asset to continue benefiting those that decide to hold. You know, the plan wasn't to find the bottom, you know, because it's not really the best way to position yourself. I don't really agree with it, you know what I mean? At the end of the day, it's an advanced play. Like if you're already holding long and you've caught the short, you put that literally on a side account, you know, or you move it aside and you get a side account. You can trade this. That's fine. But it's an advanced move. It's not something where it's like you're fighting for an opportunity that you're gonna miss. I'm like, this move isn't even worth fighting for. Literally. One, it's gonna go to the red zone. 76 points, and I'm almost confident the entire thing will be taken back to new lows. So it's like have fun with that. Tough. It's not like what it was worth when we were grinding at the bottom and there was still all of this potential with the agenda to come, you know? It's like I see difficulty for the people that try here. That's the irony. It's not like this consolidation. It's not even remotely close to being the bottom of anything. That's a fact. This was. This was when, you know, it was the hardest to find value. When it was the best to be in here, to be finding it. Now, finding the highs is the name of the game. And when the highs hold all day, what are you supposed to do? Catch the lows? I mean, most people will think, yeah, and it's like that's forcing your hand trading. It's an important lesson, in my opinion. I think very important lesson. But I cannot decide if it ends up like that. But I know that today it's basically a hedge for the people that were responsible for this big move. I think they acquired a hedge at the beginning of the day and tried to make as much money on it as possible before the assets will continue. And there's going to be one big jab where everybody's going to chase it because everybody's afraid of missing out on the next time that it's doing this. So you best believe every single average person in the world is going to be interested in jumping in the next time they even remotely see upwards movement. That's why I believe the next time we get this kind of upwards movement, it comes back hard just to get them. No farther, just to get them. Just to get them. That's it. Mark my words. Just comes back for the people that go long today. People from yesterday, people from Friday, they're fine. People from today, they get attacked after the next upwards move. If they all leave their trades, we go down first to acquire more, and then we go up. That stands a better chance at holding. If there's so many people in the way, then we will likely manage to get this first and then come down second. Ironically, if the name of the game was to follow the plan from last week, it was to hold into this one and hedge at the highs. If you found a hedge, it's not a necessity. What's the necessity is that you didn't sell because of whatever they've presented today. If you've made money on it, then that's fine, but at the end of the day, before the market even opened, I mentioned that the best play would be for those that are holding long to find a short that they could hold until the long continues. But if you try and turn around and fight for that long in here, then you understand why you should have held. Because it's literally tough as nails. It's like it's offered less and less. Look at it. Since we've got to this point down here, it offered this much. Now it offers this much. Now it offers this much. Now it offers less. Down that much, maybe? Flat bottom triangle almost, you could say. It certainly could be if it wanted to be. You place another point along that small V point in there, ironically. If you put another point on that, I mean it'll pass as flat in you know in the books of many financial uh, traders. You definitely, it's never really exactly the flattest, but it's certainly not a symmetrical triangle, and it certainly has that descriptive flat bottom where everything past that flat bottom has tried to get back to the flat bottom as quickly as it left it. Yeah, sure, they might not be able to control the spread at those times that it's at the extreme, but generally the volume would depict that there's one level and it's been hitting it. The slight variances that there have been are minimal. When I see it do stuff like this though, it reminds me of how I made that red zone in the morning. And I made that red zone in the morning to show everyone, not because it was related to a green zone at all, but I made that red zone because it was dangerous to be in it. I just highlighted the area that it was the worst place to trade in. And what the extremes look like around it. Okay? And now I come down here. I see the same thing. I see it spending most of the time in the middle, most of the people trading in there, and I'm like I think ew when I see that. I'm like, that's gross. I'm like, I don't want to be in from there. That's the worst place to be in from ever. That is the slowest, most lack of control area that the market could present. And it's number 2. Used to be this one. And for the times that it spends in these areas down here, it was fast and sharp, and you could say hard to catch because it might have been too quick or too this or too that. Same goes for this side and down here and up here. Obviously this was a consolidation itself, but when it started this area down here, it was very clear that the majority of the people are condensed inside of this little area, which reminds me of when I explain the pen. You know, I did that earlier in the morning. I explained the pen like a little chicken pen. You know, everybody's stuck inside of it, forced to trade in there because they're at the computer. And if it spends majority of the time there, it's I look at it like it's testing discipline. It's not like, oh, I should have spent time doing something else. That's an average way to think about it. Do you think that Wall Street just got up and left because it was going sideways? No, they understand everything about this consolidation and exactly when it's going to end, and it ends for them. So at least that's my belief. Like, I believe the people with all the money are the composite man. And they're forced to work with the minutia. They better learn how to when a good time to hedge it is, and it's not going to be because there's a business event every single time. Like you would think, the hedge funds are interested in hedging it because of this. You know, read the reports and everything. It's all a bunch of BS. You know, why do dark pools exist if they want you to see? If they want you to see it in the reports, it's like no, 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 no. Nope. Not for 2 seconds do I believe what they have to show me. I believe what I see in the market. I believe when I see them take all the money in the marketplace, when I see them hit all the targets that I put out there, that is number one. This is the end of the triangle. It has to be viewed as something that's allowed to test the blue and white line. The blue and white line's been the pinnacle of returning. I mean, like the whole day, right? When we were up here, the idea was is I zoomed the chart out and I was like, but the blue and white line though, right? We wanted to come down to the blue and white line. We did come down to the blue and white line. That was the first thing we did. And then when we got there, it was at a 188 and I said we would return back to that 188. We did. And that's what we did. It was off of the 141 as well. So a day where the day began off of making an M that worked like this. And then if we work like that on the way up, I'm not going to be surprised. Remember earlier I was talking about it could have 2 B points in the middle? That's where we come from. And if we do a bigger version in reverse with 2 larger B points, I believe we will come back down to hit them. I believe that it wants to get on top of the VWAP so that it can come back down to it. Basically, all of what it has to excite the people at the end of the day, just swat them right back down. And that'll show them for tomorrow. Then they're going to be afraid of going long tomorrow because it's like all of what happened today seemed tough, seemed long, seemed like it took long, seemed like it didn't work. And I'm like, well, it doesn't matter if you're holding from yesterday or Friday or the last week or whatever. Does it really matter? No. When it continues going up, it does not matter how long this took. Because as long as you protected it with a hedge, like the big players did, then it's fine. And you're just waiting for that hedge to get knocked out. And having taken off profit on the hedge, you've paid yourself for the endeavor while you're waiting for your assets to continue. You don't have to take any off the assets because you instead reduce the risk by hedging. So you can continue holding the base amount the entire time, not having to trim it off like the average individual would end up with nothing. One contract people, right? That's the idea. You know, they end up like that because of this slowness. You know, the people that tried at the beginning will be trying with less now. It is human to assume this. You know, the volume shows it. You know, people do give up and they use less. Because it's like, oh, this is going to give you this much. This is going to give you this much. This is going to give you this much. They keep thinking it's going to give them less. I say opposite. I say it will give them more from this point on. and that's contrary to popular belief. And it's contrary to what it's been doing. It's been giving less and less and less. Who's to say it doesn't go into a pinnacle and then just start flatlining? Absolutely no movement at all. Is that where we're headed? No. No way. You know, this is as flatline as it can be. It's not the SPY or nothing. You know, it can't like start doing hash marks like this, like this, like the SPY can. This is where the real money matters. The big money actually moves. Like you can tell that their attention has been given to this. You know, that the short-term minutia matters on this, not so much on the other indexes anymore. Wasn't always that way. And in the event that there's some sort of like need for industry again, maybe the other indexes will be more attractive. But it seems like our industry is becoming more technology than anything, and everything's changing into a more technological age, and tech makes money more than anything else. So I don't.
After hours, John, is about Logitech. That's it.
Oh yeah, that's terrible. They're a terrible company. Nothing good to say about Logitech. They might go up or something. What's their ticker? Logi? Is it still? Yeah, look at that. Oh, see, I was talking about the SPY in a bad way. This is terrible. Like, like this is the worst kind of company that you could trade in terms of day trading. Like when they release their earnings, they'll wake up a little bit and start moving like this. But yeah, it's terrible. Logitech, you know, they're good at making hardware, but they make you download their software and it sucks. And I'm like, well, that's just like defeats the whole purpose of having something that's half decent.
I wonder for Nasdaq, and Logitech was just on the top because still
Hmm.
Microsoft ain't showing up today, but it's all BS. So I don't know
Let's
what's wrong with them.
yeah, I wonder what they did. Why is Microsoft so inclined on moving differently?
I thought because it had the earnings come up today on my Yahoo Finance.
I know it made sense when it
Obviously
was
wrong.
moving differently. I was like, what?
Yeah.
Maybe that was like a national mistake or something.
Well, they normally don't make mistakes, eh? But
Well, you would think, yeah.
this one's kind of weird.
You
How
know,
this happened.
if I was Google, I'd make an article about that, you know, or like one of these other companies like CNBC or something would have a field day with that. Be like, they don't even have the right price. But Yahoo, they're they were really popular more so back in the day. I'll never forget with that company. They changed their ticker, and I had shares of Yahoo at the time, and they made a mistake with when they transferred them
Yahoo
over.
Finance. Yahoo Finance, the app is it's good. It's got all the indexes, and plus you can put whatever you actually own on there. You see
Like
all
a watch list,
your
yeah.
you know watch it, compare it to the other indexes and stuff like that, and found it really really good. But shit to bed today with telling me that Microsoft was going to have some earnings. Microsoft normally comes out on a Wednesday or Thursday or something like that, or a Tuesday. It doesn't come out on a Monday normally.
Interesting. I am very curious to see what's going on. Let's take a look at the earnings there for the week. Earnings was first. Let's take a look here. Yeah, they have some weird ones like United. Oh, Logitech's already released their earnings in the morning. Let's see UAL. I'll never forget when they had that doctor on the plane and he was like freaking out or something. I can't remember what happened. And they like forcefully removed him. He just seemed like an ordinary guy. But everybody was like, "Wow, I can't believe they did that." And then the stock went up 2% that day. I was like, "That's really rough," because they were being unethical about it, I think. And I think that the guy ended up winning the lawsuit. But I don't. It's starting to fade. That whole event. But the day after, the 23rd, we're provided with this information. We've got Netflix at 4, Texas Instruments at 4. It's a big company. Canadian National Railway. Um, yeah, there's some other companies in there. Nothing too crazy though.
Is this for John tomorrow?
Yes, this is tomorrow.
Okay. Yeah.
Netflix is the one.
Yeah.
That's immediately at the close. So tomorrow it'll be good to tune in for the close and see exactly what's going on.
Website's that, John?
Oh, this earnings whisper. It's earnings
No.
whispers. Sorry. Here,
Okay. Okay.
it's like this.
Yeah. Okay.
Oh, and then we got Tesla on Wednesday. IBM. A lot of other big companies like Las Vegas Sands, United Rentals, Seagate Technology. Let's see a bunch of other ones. Yeah. Wednesday, there's about 2 pages of companies that are releasing. Tesla being the number one, second to it being IBM, I'd say.
Yeah. Yeah. For sure. That's the nice thing about earnings whispers. They just have them on the top, and you just click on the day. You're good to go.
Yep, exactly. Um, Thursday's the big one. That's one you'll like with Visa on Thursday. And Intel, that's a big one. Probably that's like the one that's gonna most affect the Nasdaq in the event that it moves. We got other weird ones like Western Digital and stuff like that, and T-Mobile. That's a big company. They something would have to be very wrong with them. They're very quote unquote safe company, apparently,
So Tuesday, Wednesday, Thursday earnings, and nothing on Friday.
because they pay a nice dividend. Yeah, Fridays should be empty usually. If anything happens on Friday, it's in the morning. Oh, Levi's does it on Thursday as well. The jeans.
Yeah. 30th, Microsoft and AMD. That's gonna be a big day. And Google. I mean, three biggies right there.
Interesting. Yeah. Okay, well that makes for a good day good close tomorrow. Let's take a look at Netflix. Oh, they have participated in today's grind, except it's a little bit more positive than you would think. Their grind is a little bit more inclined. You know, and up there at that 61, it looks like it'll be a 188 200 if it decides to make this the last low. We have a 188 200 up there as well, which is right on that 61. So it's another reason why I think that area up there it's drawn to it. But I do believe it's part of a trap. More of the range could be seen after, like for instance, in the event that it gets to that level, those levels are designed to come back to this one. And what is that level if it decides to come back here? What's the green zone? And it's testing on top of all of this level, all of this here. And basically what it's asking is for that to double. Something that it's been really bad at doing. This range, well, I'm not even saying it's a range. It never was a range. It's like, if there was one way to mark the node that we originally had here, it was to do that, and we took it from the top node there. Now you see how much bigger this node has become than that one? Now if I take all of today's volume away and we look back at this original node here, that's what it looked like. You know, it was giant. It was significant. It had barriers that were very, 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 very clear. And now it's insignificant in comparison to the new one that we have, where it's twice the size. We have another node roughly the same size as this original one. Because you want to know what's funny is I marked this green zone, the higher one, as a range. Like we were using it. Like it had an inclination on making this the same kind of area that it had up here. And it shared the fact that everything outside of that green zone was a wick and spike out of the bottom. And everything came back to it. And everything still comes back to it. Doesn't matter the size. And what does that seem like? What we did on the other side of the red zone. What we did on the other side of that node. And that's how I got this red zone and this green zone. I only made this one green because it was below that red one, not because it was a range whatsoever. But it really marks the barriers of those two major nodes that started the beginning of the day. And how instead of them working to keep everything, you know, in the middle, it managed to try and make things even, you know, and put spikes on the bottom. You know, that was the first inclination that it had. Spikes and spikes and spikes. And where have we seen that before? Just up there. And we could see that even on the other side of it, it still had spikes, just like it did on that side. Nothing out of the top of it has survived longer than it was formed. Everything comes back. Sometimes it's better at coming back. And what's in the middle of it all? The VWAP. You know, not particularly the best way to range, but this is the way it chose for today, where the bottom was incredibly unfriendly with wicks and spikes at the low, and the top was the same way, and the majority of the day was spent in consolidations that didn't do the people that were part of them any good. That's the reality of it. Now I think like tomorrow, or sorry, like with the beginning of the run, I was talking about how, you know, sometimes it took like all day, right, to get to the run, and I was mentioning how it's not going to take that long anymore. I think tomorrow will be like that. Many people will think they're in for it again. They're in for today again. No, 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 no. Tomorrow there's Netflix earnings. Tomorrow there's undeniably an event that doesn't exist today. And I believe, like I said, as much as an exciting of a move this could be, all of it gets taken back before Netflix releases their earnings. These people don't get to win. I don't think. It's temporary. Temporary. It's basically making people think that that they have it for the next big run. I like the 61. The VWAP could cause some problems, but what would be appropriate is this move right here. That's what I think it's going to end up like. Sideways, big up, and then it's going to come down and end up right in the middle, then stagnate. What that means for these people that experience this after having been made to wait for so long, a lot of them are are likely to be staring out the window, not even actually paying attention to it. And I think that it's going to be a matter of speed with this one. The imbalance is coming up. Could have something to do with it. But today was a slow day, and I mentioned the idea from the beginning of it being a nice big hedge for the people associated with the big move before, that it's going to be easy for anybody that decides to hold through it. And if you found a hedge for it, it makes holding easier. Other than that, if you didn't have anything, fighting for the extreme is the job until you get it, really. I mean, that's the name of the game. And today it's undeniably a difficult low to catch the extreme from when they continuously make new lows, and I can see them interested in making more of them. So it's intriguing to me. Doesn't have to be before the close either. They could come down and snatch those purple lines right before the consolidation is over, which could be just after hours. And it's like that's how much the situation is has formed into the way that it basically depicted in the morning. This was the key. Above all, today we focus on the opportunities the market provides against the trend while we wait for the long assets to continue. Because that's the idea. You know, the best play is to be waiting for the rest of the people with the rest of the people that hedged, you know, and I don't think that there's many of them. I think that they're the few teams in the world that were responsible for making this huge run. They're hedged and they're waiting to be able to get that huge run again. They just want to make sure that these people are where they want them first, because undeniably everybody's been placed into this node. And every time we've done that so far today, or in the past even, when we get a node like that, making it uncomfortable for them is really, really important. And I think that that's necessary in the environment. So getting to the 61 is a direct threat. The purple lines even. If we get to the purple lines first, the 61 is a threat. Like, take your pick really, but positioning from the middle is a tough spot to be in from. And it's like, how many opportunities do you think it should provide people that want to be in from this point on the daily? So it's the first wick we've ever made to reach to a new all-time high, and they want the bottom of it. Means you're above this B point, above this B point, above all of these B points in here, above this B point. Remember when we were crossing that level, I said anybody that buys above that point's in danger. You know, I said it was cringe actually. Cringe. what I used the word, not a fan, because there's been so many opportunities. We're closer in the bigger picture to the next time that it could come down, and yes, it could take all of this time. You know how much time that was? I think it was 3 months, wasn't it? Yeah, 70 days, just about. And this is the environment where I think that basically everything is like wicks and spikes on top of this level. And we get here and we're like this. Okay? And I'm like, this level is insane all-time high to be buying on top of. I don't care if it does this, 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 or this. This level is incredibly dangerous to be in from. Because at any given time, this is appropriate, this is appropriate, this is appropriate, this is appropriate. They're all going to be attractive hedges. But buying in that environment is disgusting to me. I don't like it at all. So it's like it's just not good enough for me. So it shouldn't be good enough for you. That's the main thing. And like at times where it is good enough for me, it might take all day of fighting 11 lows to try and catch an environment. I say today people fight in this environment for something worth less than I've ever seen out of an environment like this. This battle is worthless, in my opinion. It shows up like it's one that's at the low, and it offers people a lot of trouble, a lot of work for what? 70 points at the most. And it's to be taken back to just jab against their positions shortly after is tough. And I can see that it's built for the environment for those that have held and decided to hedge against. They're waiting, because it's made easy for them. Like I said earlier in the day, like the staircase, when we look at the staircase down, the hedge from the high of day can be dragged down the staircase, and it doesn't even go past one of the previous steps, until we've been recently broken that uptrend, or sorry, that red yellow line. When that red yellow line broke, everything changed. It doesn't seem like it, but and it's all just part of their bigger picture plan to keep everyone contained in this area. The big dump, it's designed to scare long traders out, because think about it. If you've held overnight, right, and you see that it's up and it's went sideways and it's left a bunch of B points, don't you think that compels people to trim some off? I think that makes them reduce their position size so they can't get it back again. And who takes it? These people will. And they'll hold it. And there's not very many people there. Ordinary ones at least. And I don't count like the grandparents that have been holding for 20 years and stuff. They don't matter in this. I'm talking about the day traders that have the integrity to hold through that environment, who started in a short-term environment, fought for the lows and decided to keep them because they know they were good for them. That's what I'm talking about. The people that had control from the very, very get-go, that saw the agenda, the idea of it being something that could get us through to new all-time highs, and we knew it. Oh, actually, in the video, I'm actually talking about getting back to this specific line right here. So far, we're still at the lows. I haven't even gotten to this point yet. I think I've just gotten to there. And it's taken me nearly the an entire day, basically, to go through all of the things that I've said from here to there. But every single thing that I said about going up, every single time I said the agenda, snip, that's going to be a separate video. Like, I'm going to go hard with this one and show everybody exactly what I said about it. And we met with a day like today where, yes, you can look back in retrospect and see how easy it was, and now it provides difficulty. I expect many people to assume that it will be like this for them tomorrow. So we will find less people associated with tomorrow because of it, I think. People will give up easier tomorrow when they're presented with a consolidation. They will assume this will be the result. I think otherwise. I think it gives change. I think it does something different. I'm like 80% sure as well. Like I am absolutely like confident in it. Like it's not something I'm iffy or worried about or anything of the sort at all. Like as far as I know, it's something I know, something I can count on, you know. which means that it'll make tomorrow's consolidations easier for me to mentally make it through, knowing that information, knowing that it is worth fighting for because it's not going to take as much time, because the battles may be presented in the same way, but they're not going to end up taking the same amount of time. We might see different things uh, in the consolidation, and they can lead to ending it sooner. But what I do find likely is that they'll start the day and they'll make some volatility, and then they'll give everyone this triangle. That'll be the end of the trading day for so many people. Because consolidation invites capitulation. And it's something that you could say, I can't take this anymore, right? They're like, I can't take the sideways anymore. Lack of opportunity. And I'm like, well, like when it went sideways, like it is now, for this much time, it gave more than double last time. Take this box over here. It's not even the same size whatsoever, but the bulk of the consolidation, ironically, is. Everything outside of that box has been wicks and spikes. Even roughly the same size. When it did this, it went up that much and then down that much before. Oh, you know what? That's a very similar kind of move to what I think they can actually do here. I think I went over that though, where they start at a flat point, come up, fake everyone out, and then just take their positions from them. That kind of movement. And it can start slow. It means that people, when they chase it, will be chasing from above the B point. Like, think about it. If anyone tries to quote unquote find excitement in any further blast that we get from this point, they will all be buying above the B point, which is like above this middle area, which is ew to me, right? Like, I'm just like, ugh, can't even think about that. Which means losing. I'm like, I can't do that. That's terrible. It's like choosing to walk out in the street without looking both directions and thinking it means winning. No, 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 no. Or it's like, yeah, it's like sticking your hand in the frying grease pan again without looking. That's what that reminds me of. Finding value in the burning hot chip at the bottom of the grease pan. I'm like, gosh, it's not worth it. You will find that your fingers will be burning for days. And it's like the chip won't even be ready to eat when you get it. 8 minutes, under 8 minutes until the imbalance. But days like today, it does remind me, like it's like I feel, it reminds me of when I was doing an exam, except you would finish before the time that everybody else was, and you had to wait there, basically. Not even anything significant, but it is a matter of waiting for this hedge to be done with. And that's what I said about the beginning of the day. Remember, key words. While we wait for the long, not catch it because we weren't holding. That wasn't my intention for anybody. And I see it being difficult into the end of the day. And I just cannot stress that enough. And I'm like, well, you know what? And it's like, well, how else do you end up long for the end of today if you weren't holding from before? It's like it demands that you had the ability to hold through all of this and continue finding value beyond all of the value that it literally presented here. To understand that you're on the team of the people that have the agenda, that understand exactly that holding long is the right way to be. They don't have a target. They're trying to get it as high as they can get it. You have to understand that. We're in the business of that move. It's not a cookie cutter move that we're going to make next February. It's this is the environment, this is the now, and this is the best way to be exposed to it. No better way. And I'm like, well, that's the irony of it. This is true. Is it's very difficult, inhumane to hold through all that profit and to keep holding. It's inhumane. Like long-term grandfathers and stuff, they'll be holding 100%. You know, like my grandfather, he doesn't even know there was a dip here, guaranteed. 100%. You know, like 100%. Like he may not even know that this move even happened. You know, at the end of the day, it doesn't matter. It doesn't matter. But the people that were day trading it, I find it incredibly unlikely that they had the mental integrity to be provided with this much profit and to continue holding. A lot of people will find it easy just to give up before the weekend. I said specifically not to do that. I said if you gave up, you lose. It'll be in the video. I said if you sell, you lose. I did, and it'll be in the video. I was very clear about it, and you can see why. I'm like, what, do you like fighting this? No, nobody likes doing this. Part of the plan to make people that didn't hold fight this, because they know 90% of the people are going to show up today trying to go short. What have they been given? Peanuts. And then everybody else that didn't catch the short, what do you think they're doing? Trying to catch the low. And you can count on it. You can count on it. It's very like if you look at the amount of time that the average person puts into learning before they actually start trading, it's incredible. And the incredibly low, by the way. And also the amount of information that people are willing to take action on is incredibly cryptic and not even uh, not even clear at all. Like I like to make sure that there's specific trend lines that need to break to get to our target. It's a matter of being exposed for those trend lines and their breaks in order to get to the targets, and that's the idea. When we get to the specific levels that can influence those trend breaks like 188 200s, capturing positions along them can allow you to be in for the trend breaks that have to break in order to get to the B points every single time. Any time that you've ever played an M or a W back to the B point, you've been doing that process whether you like it or not, whether you know it or not. And that's the irony of that. Is, I mean, like, there's one right way to do it. We can either be understanding of it or not, but when the market decides to make an S wave, there's only so many moves that are given. We can either be part of them or against them. We can either understand them or we can't. And I'm like, today was necessary because it puts a lot of people in their place. I look at it like the institutions have won today. They've captured a hedge at the beginning and they've held it the entire day. They haven't made it an incredible dump for many people to take so much advantage of. A lot of people are still stuck and trapped. That's the way they want it. It's good for a hedge, a nice small profit. It's not a huge, oh my goodness, look at how much money everybody made on the short day. It's not like that. Not like that. It was like that the day that this move started. That was a day where it moved down really hard. That's what it's going to be like when this move ends. It'll be like a cliffhanger that falls hundreds of points. Okay? Mark my words. And it will. But that's when the agenda changes, when they can't convince people to short it anymore so that they can stop them out. That's when that will change. When people start to get the picture, when the economy starts to stop fighting this trend, like 2014, like 2020, just continuously, not necessarily 2020, but like here, I can do it before the imbalance. This environment here, and I was explaining this in other videos. If you go, if you go back into time, I was literally, or into the streams even, I was explaining we're going to get into an environment like this before we saw it, where every single day is slow and we inch higher, where all the people get all the time in the world to see what a nice short's like, and then they try it and it gives them nothing and it goes sideways and it's harder for them. And what continues? They don't give buying opportunities up here at all, do they? No, because you're supposed to be in. And the people that I'm saying are running positions, they're in from all the way before this. They're in from way before all of this, all of that. They're in from before any of these dips, and they're holding to the point where, in the event that market was to come back to their entry, the whole economy would go under. Their businesses would go out of operation. And that's power. Now, what do you think they're left with? Do you think they'll sell that position? No chance in hell. They won't sell it at all. They'll keep it and they'll hedge against it. They'll understand when difficulty arises in the assets they've been holding for decades. And when something comes down, they'll know it. They can take profit on it while they're waiting for that asset to continue. But the last thing that they will be interested in is selling it. The last thing they're interested in is selling it. And who are they going to sell it to? Somebody else that's of same caliber as they are, that's going to take the control and laugh at them after, make money on the dividends? No, they don't want to give those dividends up. They don't want to be able to fire like the CEO of the companies. They want to have that control. And this is the imbalance. They won't give that control up because then their competitors have it. They're in the business of obtaining that control so they can maintain it and keep it and stay on top of everyone, to own all of the companies in the industries, to be the monopoly that nobody sees, to own all of your competitors in all of the industries that are your favorite, to own, Samsung and Apple, to own all of the different companies, whatever you want to look at, they own them all. You can count on it if they're good and worth owning, and if they've been profitable, you probably count on them being in it. Yep. And then all the people that release your financial news, including especially the publicly traded ones, they own all of them, like CNBC, everything like that, and it's not illegal,
All
but
right.
it's
Not
crazy.
not on today, but thank you again for class.
Yeah, man.
Everyone have a good. Take care. See you tomorrow.
You too, man.
Yeah,
Take it
sounds
easy.
good. Take care.
Peace.
Yeah, imbalance was relatively low. Yeah. Oh yeah, and basically after I explained the need to fight for the highs, and that would benefit those that are holding, we talked about phase A can be accurate, phase B can show its brutality and could be bad or bust.
This one just went right back to the B point. Almost hit it. Just came off at 261.
From that little B point up there. Hmm.
Yep. Yep.
Yeah, I have absolutely no interest in even trading short term on side account here.
I'm just I'm nailing these with the MACD and with everything. If I can get, I'm only going
10 points.
1 on the IMNQs.
Hmm.
Just
Building a cushion.
yeah, there you go. Yeah, just having some fun.
Hmm.
When I see stuff obvious, I just jump in and
And
jump out. So
it's nice, when it gets to the target, and then basically, that having orders put there, they basically fill, and then it comes right back down to the entry point, and it's like, well, it's like acknowledging that you've basically sold at the right point. I like that. Yeah, some days I'm more interested in trading the ranges and stuff like that, but today, like, I was very much adamant on making sure that it was clear that the play was
and we'll ever
to hold against.
like all throughout today, whenever the 1 minute RSI came down and touched the green line down below or very close to it, there was a play there. You know,
Yeah.
I mean, I worked it with the MACD too, but there was a play there in the fib, so
Mm-hmm. Yeah, the moves in the morning were definitely a lot more juicy. Like the ones off the 188 that got back to the 100, and even the smaller moves, like in here, I distinctly
yeah,
remember these ones coming back to the B points in there. They were
yep.
absolutely perfect. There were other moves in here as well that have come
Yeah,
back.
they're just so many clear moves. Like
Mm-hmm.
you don't even have to be picky. I mean, there's just so many like all day. Like this long and short is just you know you're reading it right. So
Yep. Yep. Basically, I got the impression early morning that the big players would be interested in having a hedge and holding it until everyone was out of the way. And that's basically what I think is going on here. It's not meant to be
well, I looked at the hourly,
enticing.
John, when we started the day too, and I thought, we're gonna go down for a bit. So
Yeah. Well, what it did manage to
yeah,
come down, it's not incredibly significant. The
no,
it's
not by a
100
few points.
it's 150 points pretty much exactly from the high there, which is interesting. But that's not what the day will read down or nothing, but it's basically I don't even know if the day will read down as a matter of fact.
It's just a minor blip in the bigger picture, but it going up, I think.
Yeah, the day is flat right now. At this
Yeah.
level, there's no change. It doesn't even
Well,
read
I
like
think
it's
we have
down.
flat because of earnings coming up this week, right? And next week, so
Oh yeah, yeah, yeah. Well,
yeah,
Netflix is a big player. Definitely want to
yeah.
see how they go tomorrow. And I'll be watching how they trade throughout the day. You know, they trade really well. Like they've been moving better than the market has today. You know, they had a lot more volatility to them than the market did. Even from a percentage standpoint, their ability to move almost 2% off the low is pretty hardcore. Like we didn't do anything like that. Like 0.2% maybe. 0.3, you know, barely. They make it difficult to the end of the day for the people associated with this range, and then you know I can see that those that are positioned best are still holding from the day before. The whole day is tailored to those that have hedged it down and are just waiting for the people to get out of the way so that the assets, not this here because they didn't buy here, you can tell it was benefiting them still. They didn't buy here because you could tell it was still benefiting them because they were in from before. They didn't buy here because they were still in from before, so they didn't buy anywhere near here to begin with. And this isn't what they found a valuable area to reverse ever. It wasn't like this. It was way lower, is my point. It was a huge spike in spring. But, and then I'm like, well, you know, when I'm presented with a day like today where it doesn't give us any of that all day, it's kind of interesting. And we're like really far from it. The purple lines down below, like I mentioned before, they did cross, which is kind of interesting because they're for the two VWAPs there. They're both the bottom lines, the short term one and the longer term one.
I want to get over that red zone, eh?
The red zone up here,
Yeah,
yeah.
yeah,
Ultimately,
yeah.
it's what that'll look like is a test on everybody that's not in from this consolidation up here. But that could be after we get those purple lines, because basically I wonder if tomorrow those lines will be a little bit more contracted, and if we can actually get the purple lines to come into the red zone. If they could come in and meet the price in the red zone, that'd be attractive. At least the short term one. You know, I am I am tempted to take a look at this again here. Let's take a look at this. You know, it looked like it wasn't working there for a second, but when I really overlapped this here, let's take a look at what happened. I'm just curious about that, because like it did kind of manage to do what it's supposed to do here. Actually, now that I look at it, let's look at this minutia of it real quick before it closes. The move that was absolutely correct was basically to come down from here and then test this one and then come down. That was phase A. You know, we did that really well, you know? Like that was cool. We did that. And then when we were done that, we didn't manage to come back to the highs like we were supposed to here, but it kind of slumped out and started this move early. Like phase B is brutal and it can be bad at its ability to make things accurate because it's not phase A. And at the end of the day, it did that. You know, it came down here. Sure, it wasn't from the new high, but it did that. And then it came up to the highs here, which, it did do here. Doesn't have to be in a 5-wave move, but it met that resistance again. From the resistance, it came all the way back down to roughly the support lines. And then from those support lines, from that spike at the bottom there, it gravitated its way back to the other side, where now it's doing something that it basically hasn't done. It's testing the low again. But throughout the entire time, phase A, what its job is to kind of set the tone for the resistance lines. And, you can see that it did that regardless of the fact that it didn't use it in exactly the same way. I'll be damned if we're not still contained within phase A. Every single bit of phase A was super clear as it's supposed to be, and every single other part of this pattern is stuck inside of that range, exactly like it was here. Sure, there was a little bit of a spike out of the bottom there, but that's exactly how it's supposed to happen. And I'm like, well, hold on a second. Phase A can be that, the worst thing phase A can do is start this consolidation. And I mean, like, is this a sad attempt at trying to follow along with this? Because with all the people in the way that don't understand the technical analysis, sometimes in the mornings especially, you can see things aren't, things don't end up being really even. So, it's really interesting to think about that way. But we'll see how it ends up overnight. And thanks for joining. I'll catch you guys later.
Hey, John, appreciate it again.
Yeah, have a good one.
See
Thank
you
you,
guys.
John.
Yeah,
That was a
anytime.
good one.
Alrighty. Yeah, have a good one. Take her easy. See ya.